shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Yeah.
That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show. Attention, A1 Trading Show fans. If you're interested...
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. Let me get my intro music playing. Hold on. Here we go. Intro music coming in hot. Look at that. The VIX is up over 20 today. What is this telling you? What is a VIX up 10%? I'm sorry. Yeah, that is up today. 10%. Almost 11% the VIX is up this morning. What does that tell us? Well, it tells us one thing for sure. The market's not sure of anything. We've seen a parabolic rip in the VIX in the last few weeks. I actually had a friend of mine sent me a text message. He says, man, what do you think about this VIX move? He's getting into trading and investing. And I was like, the thing about the VIX is it shoots straight up and it's so violent to the upside. And then it trickles back down. And that's been the theme of the VIX for a very, very long time. In fact, that's kind of the way markets, generally speaking, they work. Like people get really scared, right? The market gets really scared and expects massive volatility. And then most of the time, the fears that the market has are not that they're invalid, but the market has this weird pattern. We as humans have this weird pattern of getting overly terrified about what could happen. When the COVID pandemic broke out in 2020, people got so scared for a good reason. People were like, we don't know what this thing is. This could shut down the economy for a very long time. And it, in some places, it did for an incredibly long time. Like China was shut down for an extensive period. But this was 2020. You saw the VIX just go absolutely monstrous higher. Look at this. VIX up like 400% plus in a matter of a few weeks. Absolutely crazy. So today, I've already had questions, people asking, Nick, is the stock market crashing? Is is gold going to go to the moon from here? Is the dollar index, a safe haven anymore because it's selling off? We've had a lot of questions in the last few days. And I got to say, just from a viewership perspective, I can tell you something that not everybody can tell you. I run 2 YouTube channels in the financial markets space, obviously. And I can tell you that views, they're up. And when views are up a lot, it tells me something because views on my channel typically follow the VIX. We usually see huge rises in views during, high volatility times like right now. And then people, when the markets normalize and they go back to doing normal things, people get quiet and they get bored. Let me just, and then they don't watch my videos as much. So here's the thing. People typically get the most terrified at the worst times to get the most terrified. That being said, why is the market so scared right now? Well, it's because we've had a really great period and people are very used to one-directional bull markets, and they're caught off guard when that condition changes. Now, I'm not saying this with ego because I've been on the wrong side of this pullback for the last few weeks. I thought we'd keep going for a while longer. I thought the pump was going to go right into the rate cut story. And I've been kind of early to the pullback, but just because I'm taking some losses or dealing with a bit of a drawdown now does not change, the facts here, which is we're still in a very bullish market. Take a look at the simple moving averages when applied to the chart on the S&P 500. And you tell me if you think that this market looks like it's truly in a bearish, fashion yet. Now, I'm not saying it can't turn into a true bear market, but we, in a bigger picture, look like we're just normalizing. We're just doing normal market things. Like when we came down and after the kind of lows of 2022, we saw this big push up, came back to the 200-day moving average, shot back up, came back to the 200 moving average, had a huge rip. Markets do this stuff, guys, and you can't be, if you are somebody who trades the NASDAQ or you've started trading in the last, 2 years, I would just caution you. I'm not trying to gatekeep or anything, but please be very careful. You only know an environment where the market goes straight up. I'm not saying that the market, has to go straight down from here, but I'm saying please understand that this is very normal behavior. It's just that normal has not been normal in a while, right? Stock markets don't usually go straight up. If you're watching gold, you know very well that they don't go straight up forever. That they don't go straight down either, right? So one of my biggest missteps recently, I shouldn't say missteps, because this year I've been really right on some things and really wrong on other things. I've been really right about rate cuts. At the beginning of the year, the market was thinking 6 rate cuts. I was not in the 6 rate cut camp. As the year progressed, I still, very heavily was positioned for rate cuts and made a lot of money trading gold on the long side this year. Where I've stepped maybe the wrong way in the last few weeks has been, I still think rate cuts are coming, but now it's not a question of whether or not rate cuts are coming. We were right about the rate cuts this year. Straight up, I got to pat myself on the back for that. Really, really right about rate cuts this year. Where we've been, I wouldn't say wrong, but where there is the potential for me to be wrong is that rate cuts can then turn into 2 scenarios, okay? Rate cut scenario 1 and rate cut scenario 2 are very different. Soft landing or hard landing. And in just a few minutes, guys, we got 5 minutes to go before NFP jobs data is coming out, and it is a huge, important note. So don't go anywhere. And I also want to just mention that if you're just tuning in, do me a big favor, hit the thumbs up button. Let's get some hype going on in here. 766 people watching between Twitter and YouTube. Good morning to you. Good afternoon, wherever you are in the world. Happy Friday. Hope you got some fun weekend plans coming your way. Okay, so rate cuts turn into 2 scenarios. Actually, I guess there's a third, no landing. But let's talk about this. I would be cool. I've been biased towards these 2 in the last few weeks. But in the full year, I've been just generally speaking on all 3. Let me try and explain that better. I've thought we've had, I was planning for rate cuts this year. I was pretty right. I think I said like 2 as early as the first start of the year. I said 2 to 3 would be more appropriate. We've narrowed in on that number. But now the question is, are those 2 to 3 rate cuts going to come at the expense of the economy where things are starting to fall apart, which is the concern right now? People are concerned that economic data is coming in too light. We'll get really key economic data in 4 minutes from now, so don't let me forget. Hard landing is you get, the economy really slowing, maybe a recession as well, with inflation coming down, and then they cut rates to try and save the economy. That's a hard landing. That's not a fun environment. In that environment, what typically would do well, would be gold would dip along with everything else at first, but probably would do well in that uncertainty environment. So, gold would do pretty well in this environment, but stocks would get killed. Where I've leaned into in the last few weeks is more thinking that we're going to get the soft landing, which I still believe is possible, or the no landing, which is inflation. We don't see a dramatic rate cut process. We just see a very, very slow, if any, rate cuts, just a very gradual rate cut process because the economy is very strong, which I think right now is probably the least likely scenario is we're probably going to either get a soft landing or a hard landing. I would say that probabilities are still for a soft landing, but if you get terrible jobs data today, it's going to be scary, because if you get terrible jobs data, meaning unemployment goes up to 4.2, 4.3, whatever, it's not going to look pretty for the market. Okay. It's going to look good for gold. Gold's going to rip, because then you're going to see, gold this year. The reason I liked gold so much for most of this year was because, again, I didn't know, I still don't know, nobody knows with certainty if the market's going to see a soft landing or a hard landing, but gold likes, generally speaking, both of those environments. Gold just wants rate cuts in general. So I've liked gold so much because of my uncertainty in which way we're going to go. But earnings season so far, yesterday we had a couple key companies report. We had Apple and Amazon. I believe Amazon was disappointing. Amazon missed on their revenue, not good for the market. And Apple came in and I think they beat on both. Yeah, they beat top and bottom. Then you take a look at some of the other ones. Meta had a smash hit earnings, really strong earnings out of Meta, big company there. Of course, we've also had Microsoft this week, which beat on the top and bottom line, right? So we had Microsoft looking good. The consumer stocks have been pretty ugly, to be completely honest. There's been several names that have not been so hot. Starbucks has had a little bit of a bounce back, but their earnings, they missed on the top and bottom. You've had some, I think you had some earnings out of, airlines, which have kind of missed. Here's another one that I know I've heard talked about a lot recently on financial education. Jeremy, who I listen to pretty frequently for, a bullish take on the markets usually. Wynn Resorts, not good, right? This is a casino stock. So you've seen some mixed stuff coming out of earnings season. So you've got some of the top companies doing well, but the average stock has not been very pretty. And, as we get into the jobs data, which is coming in 1 minute. So let me just go ahead and set up for this. Shout out to everybody who's here. We got 963 people. Do me a big favor, hit the thumbs up button on the stream. Help us out. Get more people in here. Let's talk markets and let's see what happens with this jobs data. Again, very important day. If we see a big slide in jobs, it's not going to be pretty. Stocks down, gold probably up in that scenario. If we see jobs data come in better than expected, maybe the soft landing is still in the picture. Again, we will see. We're coming in here in just a few minutes, or sorry, a few seconds. Let's go ahead and do our breaking news coming in. All right, guys, you got S&P over here, NAS, Euro, gold. Oil is selling off a cliff. My goodness. You got pound up, dollar down, US 30, that's the Dow Jones, S&P, the NASDAQ flat. Look at this, dollar down. This would tell me that based off of the price action reaction, that jobs data not great. Oh, that's not what you want to see, guys. It's going to be a rough Friday. That's my guess. You've got average hourly earnings down. That's good for the inflation story, but that's no longer the problem. The problem is, look at this, guys. We got something to talk about today. Channel views about to go up. My account, not going to be pretty. 4.3% for unemployment rate. We ticked higher on the unemployment rate today, guys. 4.1 to 4.3%. That's going to get the attention of the Fed. And I wouldn't be surprised if September is now going to be heavily debated for 50 basis point rate cuts, and that leans more towards the scared side of things. They revised the previous number down for the number of jobs added in June. Yeah, so we're getting July's numbers here today, but they were revised June even lower. I'm sorry, no, they revised, yeah, that's right. Actual number came out much lower than expected, 176K. And if you remember, I was saying yesterday that what would have been a good number for me or for markets, my guess would have been a 200,000 jobs to 175 would have been a sweet spot, because then you've got jobs growth. But this is concerning. You've got low jobs data points here. And I wouldn't be surprised if that ends red today for stock market. That's not pretty. Dollar down big time today. And again, why this is where you have to understand the interlacings of how this market works. A lot of people would say, well, dollar down, that should be good for stocks, right? It doesn't quite work like that, because it works like that when, you know, the economy is in a good place. But when the economy is looking worse now, because jobs data looks definitely not pretty, that's going to hurt the story for stocks too, right? If you're getting cooling in the economy, but the economy is really strong, then that's okay, because that's where you get down dollar, stock up. But right now, you have a very unique scenario where we are now scared, concerned about jobs growth being weak in an environment where they're going to rate cut. Again, there's two different types of rate cuts. There's rate cuts that are trying to save the economy, and rate cuts because they can cut rates and relieve some pressure. Let's take a look at the damage here today. Again, I actually, to be completely honest, would have expected a bigger down move for some of these charts. Let's have a look at the S&P 500, down 1.5%. The market's not even open today. Wow, or not even open yet on the New York Stock Exchange. S&P 500 down 1.6%. The NASDAQ getting killed here, down 2.2%. Dow Jones down 1%. The Russell down another 3%. Look at my attempt at the Russell. Absolutely got smashed. Completely fell apart there. And making me nervous as any person who would want to see a soft landing. This makes me a little bit nervous about it. Because you have to look at the data. You have to say, look, the jobs data is pointing towards something maybe a little uglier than we were hoping for. Dollar Swiss, one thing that's working well for me, man, the dollar Swiss keeps going lower, and that's about where the good news ends. No, but the dollar Swiss has been a short for me, and my goodness, this thing just keeps going over and over a cliff. Let's take a look at gold. Gold's going to love this. This is a fundamentals 101. Why does gold love this? Why is the stock market down? Why is gold up? Because the gold market is thriving off the uncertainty in the U.S. economy now. Absolutely ripping higher gold is. And this is a FOMO day for me, guys, because I'm not in this gold move anymore. I wish I was. I was in this move, got trailed out, and now it's moving on without me. But I like the story for gold. Gold looks really promising here. If you get something like this today, I will probably be a buyer, because now we're swinging a little bit more towards, hey, look, this economy might be not as fun as we thought it was. Might not be as pretty as we thought it was, right? Why are indices going down? Because labor data is showing some serious weakness, which is different than what we were thinking, right? What I mean by thinking is, if you want rate cuts to come into the picture and save the day can't be completely lost by the time the first rate cut comes in, right? So where do we go with this? What's the synopsis? Well, the dollar index is breaking 104, which is huge. For currency traders, for gold traders, this is massive, right? Huge move lower. 104 breaking out, and now even testing the 103.66. This was the low the previous time the dollar made this push lower. I mean, it's hard to fight this in terms of if you're a dollar bull, there's no defense here. This is just weak data. That is again, I mentioned this earlier in the month several times, that the NFP report was going to be more important than the CPI report, because inflation is no longer the primary concern of this market. If you are somebody watching the dollar, if you're watching interest rates, it's not about it's no longer about inflation. Inflation, it was a huge problem. It was up at 9%, but now we've got something new to deal with, which is the state of the economy. You've got jobs data coming in horrendous today, right? 114, and revising the previous number down, 4.3% unemployment rate. There is no defending this. If you're a dollar bear, this was a great day. If you're a dollar bull, this is kind of devastating, right? So again, it also is really not great for stocks, which I am long stocks. So I'm saying that I'm not picking on anybody because I've been wrong about this too. But think about this. 114,000 jobs. That's like the lowest print that we've had in a long time. Let me show you something on the Edge Finder. If we go to labor market data, chances for rate cuts increased. Absolutely, they're going to increase on this. Absolutely. In fact, I would not be surprised if now the market's going to seriously consider 50 basis points as a likely scenario to be cut in September. So basically, they're expected to cut interest rates in September, but the question is, are they going to cut 25 basis points, which is like one, standard cut, or are they going to do two standard cuts in one and do 50 basis points? It's very possible that we have that. So let me show you how devastatingly low this number is compared to the recent numbers. Look, it's not updated yet on the Edge Finder, but 114 is like here. That is a big oof in the chat. Can you guys spam oof in the chat for me for a second? Because that's an oof number. That is rough. Again, what that shows me is labor data. We got the oofs coming in the chat. Thank you for the oofs. I mean, there's nothing else to say. That's an oof. That's a big oof. Wow. Because, that really makes me think. I'm sitting here, I'm thinking, what do I change about my perspective on this? Am I still bullish stocks? Am I still bullish on these pullbacks that we're seeing in the indices? I have to think about it because I am still overall bullish on the stock market. But I have to be careful about this because this data is absolutely contrary to my opinion, which is if I think we're going to have a soft landing, it's hard for me to defend that with terrible jobs numbers coming in and revising the previous number down. Terrible. Terrible. What that tells me is I want to be long gold. I'm not saying I want to buy it here, but I'd like to be long gold again. I'd still like to be buying dips if I can get a good setup on things like the NASDAQ and S&P, because I do think that what this will probably do is ramp up efforts for rate cuts or expectations for rate cuts, which I do still think will have the potential to be bullish for the market. This is going to sound like hindsight 101, but I heard people saying the Fed should have cut in July. And hindsight is obviously 2020, but they should have cut in July. Yeah, I mean, Vincent, that's exactly what the market's feeling. I'm starting to think about a recession with these numbers. That's exactly what the market is going to start thinking. Market's going to say, oh, so the labor market's falling out. So all we did was swap out the inflation problem for an economic problem, a labor market growth economic problem. No fun. So here's the good news. The good news is, as a trader, you're not married to an opinion forever, right? If you're a long-term investor only, these are times where you just kind of have to say, well, we got to sit through it. But the cool thing about being a trader is that you can adjust. And even though I never stopped being bullish on gold, I paused on buying it so aggressively. I think probably where this leans me back into is I'm not in the hard landing camp full swing, but the concept of a soft landing versus a hard landing, today is a very pivotal day for probabilities of a hard landing just went up, no question. So if that's going to be the new potential, direction that this market goes in, then I want to be open to this possibility as a trader. So for me, that means more being bullish on gold. Rate cuts for the sake of, trying to save the economy is a very different story than rate cuts because we can cut, right? And today, I think they just upped the pressure on the story for rate cuts. I think that this jobs data is so disappointing that the rate cuts that are coming may have just shifted from a we're cutting because we can to slightly more in favor of we're cutting because we really need to. Kind of scary. Big day, NFP day. One thing's for sure is NFP day never disappoints in terms of excitement. What a crazy volatile move today. When do you think CHF will be hawkish again? That's a good question. When I look at the dollar Swiss, at least from a price action standpoint, I don't see a bottom on this one right now. So for me, what I'm looking for on this setup or on this trade that I'm in is looking for some sort of lower high. If you get some sort of lower high, then I'll be interested. Bitcoin moving lower, Ethereum lower, yields. Oh my gosh. TLT probably looks amazing today. Oh my goodness, look at that move in yields. Hey, if you're somebody who wants to buy a house, this is probably an improvement for you. 30-year mortgage rate is probably going to move lower today. Dollar yen. What a swing. Look at dollar yen, guys. Continues to go lower. Absolutely justified today. As now the question on the global stage is where are these global economies at? Just got more interesting. Because now people are going to be actually scared about, is this a recession coming? You know, we've seen signals for a long time in certain, I was saying in the certain stocks, you could see this kind of coming. Look at Costco's been down for a little bit. That stock never goes down. Here's like a restaurant conglomerate, DRI. Nike, absolutely been killed. Amazon's earnings were poor. Amazon opened at 165 today. That is going back to the beginning of this year almost. Crazy. Google down 2.3% in the pre-market. Apple's down 1.4%. CrowdStrike, don't even get me started on this thing. CrowdStrike. I don't own shares in this, but I was looking at it and I was like, do I want to start buying some CrowdStrike? But man, these are some crazy discounts, guys. But the question is, are they discounts that are going to get way more discounted or not? That's where you have to be careful. Again, stocks down 1.5% in the pre-market here for SPX. NASDAQ down to the 61.8%. I'm probably going to take another stab at NASDAQ. I'll just tell you guys that. But I'm going to be very careful about that idea. I am still in the Dow, which the Dow Jones has completely given back all of the gains that I made in it in the last few days. In 2 days, look at that, wiped out 2 days, just absolutely turned back around. Again, I think you have to be a little bit careful on the equity side. The indices looking a little bit rocky. So if I take a trade, I'm going to really think about whether or not I want to do that and where I want to take that trade. But we'll see. FedWatch Tool says 20% chance for a 50 basis point cut now. Very, very interesting. Yeah, just a swing of economic data that's been rough, guys. Again, we'll see that update shortly on the Edge Finder, the NFP numbers, and it will also update on the top setup score. But I'm going to imagine that you're going to get some swings here on the scoring of the Edge Finder once that data comes out. Once our, where is it? Employment change data will probably change a lot of scores today. If you're an Edge Finder user, keep tabs on the top setups page. That's going to look interesting today. And after stream, I will be probably taking several trades based on the top setups. If I can find something on the technicals that I like as well. Speaking of which, guys, today is the last day for our Edge Finder 55% off sale. If you don't already have a copy, it is currently 55% off. It is the biggest discount that we do all year long for our summer sale. And today is literally the last day. So if you haven't already picked up a copy of the Edge Finder, we've got a couple people standing by on our support team who can help you get access We've got a link here being dropped in the chat. If you click this link, send us a direct message right there. Boom, bam. Thank you, ma'am. You can get access to the Edge Finder for 55% off for a limited time. That is only available until the end of the day. We're doing a summer sale on this tool. So if you're looking to up your fundamentals game, if you'd like to get access to all of our different data reports, we have stuff for economic data like GDP numbers, PMI numbers, retail sales, NFP, like the jobs data today, claims on job openings. We have inflation data, interest rates data. We also have seasonality data. We have sentiment data like the commitment of traders data, which we'll be updating, by the way, later today when we get the latest round of commitment of traders data showing institutional positioning. That'll be interesting. So if you don't already have access to this tool and you'd like 55% off, click the link that's just been dropped in the chat and don't miss out on that discount. 55% off. Again, it's our biggest one of the year. All right, guys, we're going to take just a quick break, and then we're going to be joined by Kenzo, who's going to talk some charts with us as we digest all this craziness from NFP. Stay tuned. We'll be right back. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edge Finder summer sale is now live. Get 50% off all of our tools like commitment of traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year. All right, and we're back with Kenzo. Kenzo, how are you doing, man?
I'm doing great. Thanks, and you, man.
I'm doing really well, man. Happy Friday to you. Welcome back to the stream. We got 1,000 people watching, Kenzo, and I think everybody's got kind of the same question. NFP, how does this change markets from here? Do you have any specific things that you're watching or charts that you're most interested in following this NFP report? And I guess what are your thoughts on NFP?
Yes, it seems like NFP, the way the numbers are quite low, I'm afraid that we might start to hear about recession, which is not really good because the market, actually the economy is slowing down. That is not really good for both whether stock market or the actual economy. And I think now Federal Reserve, they are forced to cut the rates. Let's hope that maybe they're going to cut with a bigger number, or maybe they will just specify that maybe on the next session or on the next rate cuts, they're going to add more, because at the moment, it seems like things are worse. Higher rates don't really look good for this economy, so they have to do something. But at the moment, I was watching gold, which it was going up. It's like the market did not really react much to gold. And at the moment, I was also watching USD, NASDAQ, and SP500. I think maybe once the market opens, we will see a nice reversal. I know that the market has been selling, especially on the tech stocks, but I think we will have a nice reversal, especially once the market opens.
Yeah, that's an interesting take on that also, because you mentioned if you're talking about a recession, concerns for a recession, I think, are definitely going to increase after today. I mean, Kenzo, this number, I was showing this chart earlier. This number is scary. I mean, if you take a look at the 114 number that just came out, it hasn't updated on the Edge Finder just yet. It will in just a few minutes. 114 is going to come in like right there, which is the lowest jobs data print that we have had in quite literally a couple years. That's a really, really low number. Not to mention, unemployment rate just went from 4.1% up to 4.3%. Now, these are still historically low numbers that the Fed is going to be working with. So I'm not necessarily terrified that, unemployment rate where it's at currently is at a terrible level. But what's concerning about this is that it jumping like this could be picking up momentum. Like next time around, it could be 4.4, then 4.5, then 4.7, 7, or that's the concern is now we have a very strong trend of labor data cooling down. I personally am still overall bullish on the stock market. I still like the AI trade a lot as well, but I have to be really careful because this does look like it spells maybe increased possibilities of a recession. And truthfully, for me, what that makes me a little bit more bullish on is going back to what I have been bullish on for most of this year, which is gold. Gold's breaking through the highs. I'm curious what your charts are showing you, or what ideas you have specifically on gold. Are you more bullish today on gold? Are you not as bullish? Are you kind of bearish on gold? What are your thoughts on gold?
Yes, I'm actually bullish. So we were on a trade, but whatever that it's happening now with NFP. So I'm hoping maybe for a clear breakout, maybe we can continue adding more. Plus, that is not actually all about NFP because it's been going up. So even the tensions in on the Middle East, that is gonna worsen gold to push the upside. I think we still have a nice run because now I think it's quite clear that we're gonna cut the rates as the dollar is very weak. And the panic of recession might also add more on gold, and we might start to see some very new highs on gold.
Yeah, and again, you're seeing as we speak right now, just near the all-time high for gold, and what a crazy move! I mean, not to mention this is a day where the stock market is down, 1.5%, and here's gold breaking through the highs. So a really interesting divergence there, and gold's been a really nice, even hedge. Not always, but in recent times, been a very nice hedge to being long stocks. Gold, again, enjoying this for a different reason. People who are wondering why is, what's going on, people who are confused on this day, I want you to think about this. The dollar is down, but the dollar being down does not mean stocks have to go up. The dollar meaning going down on bad news for the economy is also right now bad news for the NASDAQ, bad news for the S&P 500, because it says, oh yeah, we might go into a recession, which is terrible for company earnings. But a recession, or concerns about a recession, are
Exactly.
very good for gold because the dollar weakens, making the price per ounce of gold higher, right? The dollar is weaker, but also the expectations for stimulus and money printing go up, which is also bullish for gold. So gold is kind of the champion of the day, I would say.
Exactly. So for gold, I think it's still gonna go even higher as long as the dollar is not performing very well. That is gonna be the alternative of actually once we see US struggling like this, it gives gold a time to shine. And the worst thing is at the moment we have stock market which are also selling, but the number of whatever that we see on NFP, it's not really good because it shows the slowdown of the market, and that is also not good for stock market. So even though we might expect some recovery there on the stocks, I don't think maybe it's going to be just as quick as we thought, because a recession it's not actually good for everything. Because now if you have products, people they can't buy them because they are afraid to spend their last money because things are not looking very nice on the economy side. So which means we might see some slows down. Yes, the market might try to recover, but I don't think we're gonna see some crazy move at the moment.
Yeah, no, I agree with you, and I think that that's a good point. The consumer has already been showing signs of cracking. I was going through this earlier, Kenzo, but this might be interesting just to discuss for a moment. This is XLY, which is a ETF that tracks a basket of stocks in the consumer discretionary components of the economy. So for listeners who don't know what that means, think about companies that people don't have to spend their money with, but choose to when things are going well. So like Nike, right? People buy Nike shoes when they have a little extra money. If you're thinking about Amazon, people do a lot more Amazon shopping when they've got extra money. Tesla, right? Obviously kind of a luxury car brand in the US. These companies make up big components to the consumer discretionary ETF XLY. Well, XLY has been getting crushed, and today is down another 2.8%. And from its recent highs is down, pretty big numbers here. 9%, and that's going off of something that's already been kind of struggling in recent times. So you take a look at the consumer; they're showing some weakness. You take a look at the tech trade, which is dependent on the economy staying strong. Really, it's a bit of an ugly day for sure. What else are you watching, Kenzo? Did you talk about the dollar, and with the dollar, do you think this has more room to go lower?
DXY, since we had a support, I think the market, it was struggling to break this support. I think since the market just broke out now, maybe the market might start to go even lower. So the question is, are we going here or maybe this area? So it's up to the market, but I think slowly we will see the market trying to go even lower. So that's not really good. But as long as if maybe the market will go slower, that is fine, because we don't really like a very strong dollar, but we just don't really want it to see it crashing. So it's like we need the balance actually. So that is quite difficult, but it's a good thing that we see the dollar losing the momentum, so that they can cut the rates. But if it just crash like that, that is not really good, by the way. But let's just wait and see. I think maybe we might see a smaller move going further, maybe a nice range going lower. That will be fine. But if we just see a straight move like that, that is going to be a panic, and that might cause a recession.
Yeah, that's interesting points there, especially that dollar index breaking the 104 level for the first time. Well, I guess it's breaking to a new low for the first time in many months. We saw this attempt to go lower on the dollar index and then strong bounce back. But the economy being so, under scrutiny today is definitely making the dollar look a little bit concerning. I mean, if you get something like this, I would also not be surprised if sellers do step back in and continue to push this thing lower. I mean, we've really seen today, some signs that inflation is no longer a problem, but at the same time, we might have just swapped out the problem of inflation for a problem in the labor market. And arguably that is just as bad, because if you get concerns about a serious recession, it's like you mentioned, that concern could expand to consumers not being able to afford things, and that could cause businesses to lay off employees, and businesses laying off employees means the consumer gets weaker. That's like the cycle of a recession is businesses get weak, and people look to the Fed to inject some sort of liquidity back into the system to try and save the day. So we will see what the Fed does, but Kenzo, the probabilities for a 50 basis point rate cut in September have actually gone up. And I said this a week ago. Actually, whoa, look at this. It drastically changed. Look at this, Kenzo. So 30% chance that we see one rate cut or 25 basis point cut. We jumped up to 70% chance of 50 basis point rate cuts in September. Wow. And on that same day, the stock market is down big time. So again, rate cuts are only good if it's accompanied with a strong economy. But rate cuts plus weakening economy, or even, recession scared economy, not as fun.
Exactly. Yeah, and I think that actually that NFP, it's like way too low for quite some time. I think I never saw that for the whole year. So I think even Powell may be surprised because of the numbers. They will be obviously trying to press the buttons very quick. I think they will actually reach that 50 basis points. It's possible, because they have to make sure that the rates are lower so that the economy can seriously bounce back as quick as possible. But we will see. I don't think 25 basis points will help at this moment.
Look at this, even Kenzo. To your point, I mean, 50 basis points seems increasingly likely after today's number, because now we're seeing by the December meeting, end of the year, the possibilities of many rate cuts are coming in. Now you're getting 4 rate cut possibilities. We're at 525 to 550. So that's 100 basis points. Very interesting. 125 basis points and 150 basis points being possible, at least by the odds shown in the Fed Watch tool. I mean, it makes sense though, because look at yields today. Yields are an absolute cliff jump. Look at this. This is the 2-year yield down to 3.947. We were just up in the 4.5s and yields just absolutely tanked. Really crazy to see that today.
Yeah, that shows that the rates are going to go lower. So 2-year yields rates are going lower. So that shows the weakness. So that's not really good.
No, it's very, very interesting to see that. And again, if you take a look at the Russell too, Russell is smaller companies, and smaller companies, yes, they want rate cuts, but they don't want rate cuts plus, recession. Recession for small caps is an ugly, ugly spot. Look at this. It blew right through the 61.8% retracement. We're sitting right at support for the Russell. But again, if you start taking out some of these levels, take a look at the NASDAQ sitting at support, S&P 500 not quite at support. But if these levels get taken out, again, we very well may see the carnage in the stock world continue. But very, very violent moves here today.
Yes, actually, especially on the tech stocks, I think we might still see some aggressive sell before we see some very nice moves, because mostly we know that actually for the stock market, it was supposed to be a good thing. But just because the stock market, it was already selling, I think we might see a continuation. Already we are on the support. Maybe we might reach 1720 or 17200 before maybe we see a very nice push. And if you still remember, we saw this push because of AI boom. And it seems like almost all those companies which were covering AI, they did not really gain much because they did release their earnings. We saw Intel missing the estimates, AMD going down. Almost all of them, they're not performing very well. Even though maybe there is Meta platforms, Apple is not really bad, but you can see that we don't really see any revenue from the AI, which they actually invested before or a few months ago. So that might make the panic to have a nice sell-off, because some of the sell-off is not really that bad. It's just that maybe they just taking their profits as they see that there's no any growth. Then after, maybe once the market reaches this lowest levels, maybe the market might try to go back quite slower. Plus, we also have NFP, which is very weak. That might also help stock market to go up. But at the moment, I think we have so much stuff that we can try to digest. So it's no longer only AI, it's also recession, it's also interest rates, so many things at once. But there is a room for growth. Yes, we might have some sales, but I think a reversal might be there.
Yeah. It's the question is, where is the bottom on some of these moves? And it's hard to spot a bottom on this one, because we just broke the 100-day moving average. We broke the 50. We broke the 20. The next line of the defense for the NASDAQ is like the 200-day moving average, which, especially for stock traders on the S&P 500, the NASDAQ, the 200-day moving average is like the holy grail defense. If that breaks, suddenly you have probably a true bear market. Usually speaking, market participants would take that as a generally speaking, a bear market. Starting is a break of usually a bear market. I think the is it a 20% or a 10% correction plus is a bear market. But we still have again, that's the thing. The S&P 500 has had such a massive run up. It very well may have a little bit more room to squeeze lower. And this would be a 12.5% pullback would get us back down to the April lows. I don't know if we get all the way down there, or if this is more of a, maybe we're going to see about a 8% pullback, but it's kind of tough. Kenzo, if you were to be a buyer, what levels would you mark up as most interested to you on S&P 500, NASDAQ, any of the majors?
On a buyer, if I was a buyer, I was just going to wait for these two levels. The first one, it was where the market is, 18,470, or maybe 17,200. If the market breaks this level, I think the second level is going to be much better, and maybe at least the market, everyone will be thinking about buying around this area. It's where I can actually buy, or let's say between this area and that, it's where I can actually look for buy positions. So on S&P 500, I think it's going to be quite similar. On S&P, I'm waiting for this area also. I think it's quite similar to what you have drawn there. But the third one there, I think, is quite not really that low. I think this area is what I am looking at. It's 5,300, I think, and 5.2. Those are the levels that I'm waiting for. But if maybe the market respect this, I will be ready to go in. But between this area, it's where I can think it's a very nice buy zone for now. But if the market goes below that, I think we'll be on a pure downtrend.
Yeah, no, that's a good point too. If it breaks some of those levels, that's where you start looking at where is this thing really going. I mean, if you start seeing 5,300, 5,200, if those levels start to break on the S&P 500, then I start getting a little bit nervous that we very well could see a move down to the April lows around 5,000. I think that, you know, as this S&P pulls back a little bit further, as you're getting closer to these levels, I would expect some reaction if this bull market is going to continue. You'd expect some pullback to this level to be bought to a degree. But if it doesn't, then yes, I'm totally with you. I think then you start getting worried about a bigger push down to like the 5,000 level, which some would say is a great, you know, longer term buying opportunity. And for the bears might actually be a big signal to kind of stay on the sell side of the indices for the time being. There's also some interesting moves happening in the currency world. Kenzo, have you seen the dollar yen? This thing is really going crazy.
Yes, I think Japanese yen, I think Bank of Japan, they did increase their rates. I think it was Wednesday or I think it's Wednesday. So we saw some very aggressive sell. That was quite weaker. I was expecting to see a continuation of that sell. We did have a sell around this level, but for nothing, might try to go slower. But I think there is a room for a continuation of a sell. But this meltdown here, even though we expect the market to sell, I don't think it's a very nice structure. The market was just melting there. The market might try to recover before we see a proper structure going down. I don't think the market can keep up with this type of a trend. So yeah, I think this is not really good for the dollar on Japanese yen.
Yeah, and again, the yen kind of completely fell apart. You've got the same trend line as I do. This, you know, upward trend line was looking so strong for so long. The yen just kept getting beat up against other currencies. But now I think we have serious contention for yen strength. And it's something that we have to clarify, because the yen looks strong because the other currencies look very weak. They look very concerning, right? If you're taking a look at the US economic data today and you're saying, wow, the labor data for the US just came out horrendous. And, you know, PMI this week for manufacturing looked terrible. And, you know, you have inflation cooling, but perhaps inflation is cooling in the US because the economy is really slowing dramatically. So you look at that and you say, well, where can I hide? Well, many investors are hiding in the yen. They're either buying the yen or they're covering their shorts on the yen, which is probably the more likely case. In fact, we could check that on the commitment of traders data, and exactly that is happening. So take a look at this. The yen, Kenzo, as of last week, saw the biggest number of short coverings in a long time. Look at this. So if we take a look at the Japanese yen contracts that were traded, there was a huge amount of buying on a week over week change. This is the week to week change of long contracts. And if we take a look at the short contracts, this is so interesting. They closed an even more dramatic amount of shorts. So this move in the yen seems like a ginormous short covering activity. I mean, there's also buying, as we saw, but a lot of short covering, a lot of buying of the yen, and that signals global recession fears are up. That doesn't mean that the recession is a certainty or anything like that. It just means that concerns for a global recession certainly have risen in the last few weeks, and very exemplified by the sell-off in currencies against the yen. The yen looking very, very strong. Take a look at JXY. This is just like DXY, but Japanese yen. Again, huge push higher for the Japanese yen.
Whoa.
And even if you don't trade the yen pairs, it's worth noting that the strength in the yen is signaling something to us.
Exactly. That is very aggressively positive. So yeah, and that increase in basis points or interest rates on Japanese yen, I think that also helped to boost their economy. So, and whatever that we see now, it shows that the dollar is weaker, even though the dollar is Japanese yen is not really aggressively that stronger. But once we compare it with other pairs, obviously it's just going to be stronger. So yeah, I think even if we can have some reversal, I think we will see a nice downtrend continuing. Maybe I think we are now on a downtrend. I think we've been going up for quite some time now. Maybe now it's time for a downtrend.
Yeah, exactly. Well, Kenzo, I want to thank you for coming on today. I know today was a absolutely huge day, and your commentary I know was much appreciated by myself as well as probably a lot of our audience. Before we let you go, we've dropped the link to Kenzo's channel for anybody who's watching. If you enjoyed Kenzo's commentary, please do us a favor here on the A1 Trading Show. Our guests that come on, that contribute to the show, we're not paying them to come on. They are coming on by their own choice. They have their own social medias that they're also trying to grow. And, our returning of the favor is hopefully for you guys to go follow and subscribe and check out their content as well. Kenzo's got some great stuff. I listen to his content pretty regularly myself. So check it out. Kenzo's linked in the chat. And Kenzo, thank you very much for coming on the show today. And we'll see you next week.
Thank you very much, and your viewers, man. Thanks. I'll see you next week.
See you, Kenzo. Yeah, guys. Wow. What a day, man. What a volatile day. You know, the weird thing is, I mentioned this earlier, but I want to reiterate in case new people have shuffled into the live stream. One thing that we've noticed, and it always happens this way, but views for our two YouTube channels, the Trader Nick YouTube channel and the A1 Trading channel, are up a ton. And it is no coincidence that when views are up a ton, what that usually signals is that volatility is high. It's almost always the case. It is almost always the case that when the VIX is up, so are views on our channel. Now, why do I mention that to you guys? Well, the reason I mention that to you is that a lot of people will come in waves to watch our content when things are really scary, and then they will drop off and lose interest when things get boring again. These are the times where, when things get really volatile in the markets, that you really double down, batten down the hatches, and you make sure that you're doing something that you're supposed to be doing with your trading. A lot of times people will make big mistakes during these times. They'll go, they'll let the fear and emotion get to their head. I'm in a drawdown now, but I've been doing this for so long. I just know that drawdowns are part of the game. I've taken several losses on the NASDAQ in a row, but I'm not in a 50, 75% drawdown on my account. I'm in maybe like a 7% drawdown or 6% drawdown overall. So the point is, don't let times like this completely change what you're doing in the market. Don't let those high emotion moments, which do lead to a lot of views on our channel. I like to spread that message. Take a step back. It's just the markets. They'll always be here. Don't do anything silly or stupid. A lot of people make big mistakes during times like this. Nick, do you still hold the dollar Swiss position? I do. I'm still short on dollar Swiss, and this trade has just been a monster mover. I mean, look at how the risk to reward on this thing. I risked 42 pips. I'm currently floating 350. Crazy. Gold is selling like crazy. I hope it does because I want to buy it. Gold, I don't know if I would call that selling crazy. Maybe if you're looking at like a 1 minute chart. Look at that big push up. I'm actually interested in buying gold. I'm going to watch that one today out the gate. If I can get it set up on gold, I will probably go long. And if I take that trade, I'll share it in the Discord channel. If you're not in the Discord and you'd like to come join us, we'll drop the link to the Discord right now in the chat. There's a free version. And if you want to get access to the signals, that is a paid product that we offer. If you'd like to get access to the signals, we'll also drop the link to the chat where you can speak directly to a member of our team about getting access. And while I'm on the subject, if you're somebody who watches the stream regularly and you would like to get a copy of the Edge Finder, this is your fair warning. Today is actually the last day. No cap. Today is the last day of our summer sale event, which ran for the last week. We're doing 55% off the Edge Finder Pro. It is a one-time fee to get access to the tool. You get access to the commitment of traders data, all of our economic data, our top setups algorithm, and so much more. This tool, I'm telling you what, today's not a great day for me to advocate for the tool because I'm having a red day, but don't let that impact you because every trader has drawdowns and it's part of the game. So if you're dealing with a drawdown, don't let it worry you. It's as long as you're sticking to rules that make sense and you're not over leveraging or risking too much, drawdown shouldn't scare you. It's just part of the game. It's just part of the game. I had a huge upswing and I gave back almost all of those gains recently, which, again, is not fun, but that's trading for you. Sometimes you have a good streak and then it's followed by a bad streak. And then, you just kind of have to push through the mud until you get back to the next good streak. And all you can do as a trader, it's really important that as a trader, you recognize that, I don't like to sound like I'm like, an entrepreneur, guru social media account, how like they're like, oh, quit your job. And, why are you working a 9 to 5? I mean, I work a 9 to 5 every day. In fact, I work way more than a 9 to 5. I work like a 9 to 9, like an 8 to 9. The reason I point that out is that a lot of times people can't handle that. This is how trading actually goes. Like this is your return because most people, I hate to sound like a social media entrepreneur, those media accounts. I find those really annoying. This is kind of like the standard, what most people are used to, which is with a job, you get this kind of like consistent pay and you show up to work, you make money. What is very, very difficult and never stops being difficult, by the way, about trading is that trading does not give you this type of return. It's not, this is very nice. The huge perk of having a job is that you get a consistent paycheck over time. That is so nice. You can build your life around that. The difficulty with trading is that trading has ups and downs. And if you're disciplined enough, then you recognize that there is some similarities over the very long term. But on the day to day, man, the swings are wild, right? You'll be up a lot. You're like, this is way better than a job. And then you're like, oh, this is way worse than a job. I wish I just had a job. I wish I just had a job. This is awesome. So that's my point is just, don't let days like this where, for me, this is a down day. Don't let down days when you have them. If this is an up day for you, then awesome. Don't let this impact your thinking too much. Don't let this impact your thinking too much, except that trading is just never going to be perfectly consistent returns. It is all about letting patience, as Vincent puts in the chat for us. Thank you, Vincent. We needed this talk today. I needed it too. I'm talking to myself right now. I don't know. I don't care that there's 800 people watching. I'm talking to myself. You just have to remember, it is not like a job. A job, you get paid to show up, you go home, and you're done with it. With trading and also entrepreneurship, by the way, there are upswings and there are terrible downswings and there are it just, if you can't handle the heat, what's the expression? You can't stay out of the kitchen, right? If you can't handle the heat, stay out of the kitchen. I don't think that's the expression. But again, my point is, if you're up today, don't let it get to your head. I was up massively a couple days ago. I was up massively the last few months. This last few weeks have been rough for me. So just don't let it get to your head. When you're doing really well and when you're doing really poor, don't let it completely destroy you either and make you change strategies. A lot of times what people will do in this moment is they'll say, my strategy sucks. I need to change strategies. Or, so-and-so is a terrible trader. I should have never listened to them. Or this person is a god trader. I should only listen to them. I mean, that is, again, I hate to sound like a toxic entrepreneur social media guy, but that is kind of like sheep mentality. If you're just like only be able to see what's directly in front of you, maybe like a deer in the headlights is a better analysis. A deer in the headlights just standing there like, oh my gosh. Don't be overexcited here or completely abandon your ideas and your ideology when things are going poorly. To recap, to people who just tuned into the stream, jobs data came out horrendous this morning. Let's recap that for a second, because there is no defending this. I am more on the soft landing camp, but today's numbers do not support my idea. It doesn't mean that we can't have a soft landing, but the possibility of a soft landing was greatly doubted today with these numbers. Let's break this down. Average hourly earnings, which is an inflation gauge, did come down. But the problem with getting excited about that is that inflation coming down is not the scare anymore. People aren't inflation's at a modest level to a degree. It's still above long-term goal of 2%, but it's no longer a threatening thing. Inflation, guys, was at 9% a couple years ago. That's threatening. That's terrifying, because that can crush people's spending. Now, the concern is it has started to crush people's spending, people's ability to afford things. We've seen that coming for a long time. But now it's starting to impact employment. If everybody who complains about, the grocery store is super expensive, I'm one of those people, by the way. Those price rises, people can't afford them. When people can't afford them, businesses get hurt too. When businesses get hurt, you might say, yeah, you didn't need any more money. Well, them not having any more money turns into this. It turns into unemployment. It turns into people losing their jobs, which is starting to rise. It's been rising, but today's number, not good. 114,000 jobs added, and they revised what was last month's numbers down. Jobs data came out horrendous. There's no other way of saying it. Horrendous. Maybe I'll title my video today horrendous, because that's a good name for a video. Absolutely horrendous. Because what this shows now is that rate cuts are still going to come into the picture, but rate cuts are not expected to be, I keep going back to this theme, but I want to make sure people get it. Rate cuts are only a good thing if the economy is hanging in there. If the economy is falling apart, rate cuts are not good. And let me be clear. I'm not saying that the economy is falling apart with these numbers, but these numbers indicate a greater possibility that there is a recession coming. I'm not saying, recession confirmed. Please hear the difference. I'm saying this is a bad print. One really bad print came in today. Doesn't mean the world is ending, but it's a bad print. And a bad print is not helpful, right? Not a positive thing. So the markets hate this. Stock market dropped hard on this. Look at the Russell, down 3.6% on the day. The VIX is up 13% on the day. Gold loves this. And again, if you don't understand fundamentally why gold loves this, the Edge Finder has been bullish on gold because the economic data has been coming in light. Yesterday's manufacturing PMI came in very light, gave us a bullish tilt for gold. Services PMI, also light, bullish readings for gold. Inflation has been cooling, which is good for gold. Interest rates falling, good for gold. Retail sales did beat. But once this data updates, guys, you're going to see probably a very bullish reading for gold pop in. Once that updates, this is on a timer to update the algorithm. It will update pretty soon. Once that updates, guys, Gold's probably going to be a very bullish reading. I'll probably be looking to go long gold because this is concerning. It's not, again, it's not recession confirmed, not end of the world, but you have to factor in this is some weak data coming in, and the probabilities for rate cuts dramatically increased. Look at this, guys. The market is now thinking that for September, there is a 61% chance that we see 50 basis point cuts rather than 25. I would not have guessed this. If you told me yesterday, how much is NFP going to increase chances for a 50 basis point cut in September, I would have said probably not a lot. 50 basis points is now the market's guess of what's going to happen in September. And this is why markets are volatile. This is why, people get really hurt in the stock market, in the Forex market, when they trade futures. People lose a lot of money because they risk too much thinking they know exactly what's going to happen. Clearly, none of us know with certainty. I've been in the soft landing camp, if you will. This challenges my thought. Doesn't mean we can't have a soft landing. Let me be clear. I'm not saying the chances are dead, but the chances for a recession inevitably went up today. And so we have to be aware that chances of a recession going up is going to impact how the market trades. We're about 2 minutes away from the stock market open. That is a real question of how this is going to be reacted to once the stock market opens, again, in about 1.5 minutes. Nick, there's such calmness when you talk. I'm really impressed. God bless you and your team. Thank you very much for that kind comment. Today's a big red day for me today, so maybe my calmness is just, well, I'm not calm. I'm actually very, very awake right now, as you could probably imagine. It's a red day for me for sure. Let me not try and shy away from that. I've had some really green days, had some really red days, but today,
you want to see PNL? I don't have it right now.
Thank you, Ivan, for that comment. Red day 101. So, but again, you're going to have red days. Let me show you. You guys ready for this? Ready for this? Ready? NVIDIA. If only my equity curve was just if only I was just 100% invested in NVIDIA, it would be the easiest life ever. But I want to show you something. NVIDIA, the best performing stock, I couldn't pick a more optimal stock. And it still has huge red days. Again, so even if your performance was 100% mirrored to NVIDIA, you had huge red days, huge drawdowns, 38% drawdown, 40% drawdown. Look at, NVIDIA, one of the best performing stocks in the stock market, down 70% almost in 2022. You're going to have green days and red days, and that's part of trading. Stock market just opened up. Let's see what we get in terms of a reaction here on the 5-minute chart. 9:30 just hit. Again, stock market just opened up, and we'll see how the market is reacting to all of this. I am still in my DIA position, the Dow Jones, which is doing not great today, but a heck of a lot better than it was. I'm sorry, a heck of a lot better than my NASDAQ trade is and my S&P trade, or not my S&P trade, but my NAS trade and the other ones that I've been long on, really been rough. Anyways, we'll see. I mean, this market could buy this dip or sell hard into the volume. I do have still a bullish bias on the market, but I've got to wait for the dust to settle. I'd like to see the S&P drive a little lower. In which case, maybe I get some better entries. The other thing I'm watching out of the gate is gold. Gold back near the highs. I either like a breakout and retest of gold or a bigger pullback on gold. But I am watching gold for possible buys. I like this one a lot. But I do think, as much as I am bullish on the NASDAQ, I have to just be careful watching this because this is a beautiful setup. But the Edge Finder is not giving me a bullish setup on the Dow. In fact, it's not even, it's only giving me a bullish setup on the Dow Jones right now. I'm sorry, bullish setup on the S&P or the NASDAQ. Both of those fell off for bullish readings for the indices, but there's the very bullish reading, guys. I told you that would happen. Edge Finder's going to say very bullish today. That's going to make me very interested in gold. Gold and the Dow. I mean, these are your safe haven kinds of areas of the market. I mean, if you're really trying to be bearish, you could short the stock market. But for me, the Dow Jones, which is more blue chip companies, I'm still long on the Dow. That's ended up being one of my better plays recently. It's just been staying long the Dow. But I might get stopped out on this one too. I mean, that's kind of disappointing because this thing really held support beautifully, shot up, came back down. But if it takes out those lows, I've got to move on. I've got to step to the side and let the dust settle on some of these indices. Look at the Russell. My buy on the Russell yesterday, horrible. Bought the Russell here, stopped out. Markets kept going lower. My goodness. I mean, if there's one thing here that's happening, a lot of people who have been watching, the NASDAQ just scream higher every single day, they're finally getting some vindication. And I'm actually, again, as much as it hurts to lose trades, I'm happy to see the stock market actually getting a bearish push. Again, I want to reiterate that I am still bullish overall, but a pullback is a healthy thing in stocks. When you go extended periods of time without a pullback, this is what happens. We had a run from the April lows, 22% push in the NASDAQ. That's not a normal market move. It's a very abnormal, very rare to get such a parabolic move. So finally, we're seeing a pullback. And not only are we seeing a pullback, but we're seeing a pretty aggressive one, especially for technology stocks, which are really taking a hit. The NASDAQ's down 2.2% today. S&P 500 down 1.5% today. And I'll tell you what I'm down. I am down 2.22% today. So I'm about in line with the NASDAQ, which is rough. Rough. I sound like a dog. 15% for the VIX. My goodness, man. At this point, though, I've stopped out a lot of my trades, so I actually would like the market to roll over a little bit more. But where am I going to be positioned? I mean, I like the Dow Jones. I like the setup on the Dow. Unless it breaks, if it breaks those lows, though, I got to be disciplined. I got to stop out. Let's see what else we can look at on the Edge Finder. By the way, I mentioned this earlier, but in case you missed it, we are currently doing 55% off on the Edge Finder. And man, I didn't take this trade, but I so should have. Shoulda, coulda, woulda. The dollar yen has been a golden setup on the Edge Finder for about 3 weeks. Golden. Absolutely perfect. If you were short dollar yen, Chris Pulver has been short along the yen. He's probably killing it right now. Yen's actually just dropping off a cliff. Still in Bitcoin, right? No, I'm not. Not in Bitcoin. Stopped out on Bitcoin. Again, rough couple weeks for me. My comment section during these times about to get ugly. I appreciate you guys for not. There's been very little slander in the chat today. Thank you guys. But I know my comment section is about to be ugly from people who disagree with me. It's okay though. It's part of the game. Can't complain. You can't complain if you have. I'm just thankful to have an audience. I accept that that's going to happen. I accept that I'm going to get slander for when I'm wrong. But I do appreciate those of you guys who are supportive of my attempt to be transparent. I got to say, sometimes it is tempting to not be transparent about when you're going through a losing streak, because the backlash that you get as an influencer, there's some of you guys, does anybody know Tom Hugard? Hugard, I'm not sure how to say his name. Super legit trader who was on Twitter for a long time. Like, no question. The dude posted broker statements. Like, he was super legit. And as far as I know, Trader Tom, yes, Trader Tom Hugard, he's super popular on Twitter. He just walked away from the social media scene entirely because he mentioned that, I mean, he made a post about it just saying, you know, I trade live every day, but I've gotten so much hate, so much like backlash for it. And it's part of the territory. I mean, I hate that for him and for my fellow content creators in the space. You know, it's hard. There are moments where you just get absolutely beat up as if you're not losing thousands of dollars already. And then you get hate comments. It's like, come on. But yeah, there it is. Tom Hugard, you can look him up. I don't think he's active on social media anymore, but super, super legit dude. Like, he would trade live regulated accounts on YouTube, taking trades. His comments were turned off. I don't even think he sold anything. Like, probably, I mean, maybe he did. I don't know. Doesn't matter. He had real broker statements. Doesn't matter if you sell something or not. In my opinion, if you have broker statements, it gives you full pass to sell whatever you want. Because again, people can see your P&L. But showing P&L and showing transparency is really hard, because there are times when, you know, I'm just so dead wrong, like I have been the last few weeks, and I still got to get up here and talk about it. And so you're telling me he's no longer coming on live? Yeah, I think he stopped doing live streams because he posted some of the messages that he was getting privately, and they get nasty. I mean, I get nasty messages too, but it's just part of the territory. I accept that it's going to happen. I'm not saying please don't bully me or anything like that. I can take it. I've done it for a long time. I'm just saying that the pressures of trading are hard enough. So be kind to people you watch on social media. I know that, you know, it's easy to hate on, you know, people when they're on YouTube because they kind of just seem like a figure on YouTube, but they're real people. And I do want to just say, I say all that to also thank the many people, the way more people that are very supportive on my channel, as well as other social media channels like mine. Do your part to support your favorite trading creators, because again, if you want them to do it for the long term, it wears on people. So I'm really not trying to complain because my comment section is genuinely very wholesome for the most part. We get our haters, but for the most part, we have a wonderful community around us. And I appreciate you guys. Thank you. By far the most transparent trader in the space, as I've said many times. Thanks, Lee. I appreciate it. Again, I've got a lot of incredibly supportive followers, and you know, we are thankful for that. And you know, people who just there's just a lot of stuff, you know, like the live streams. There's a lot of work behind them. People will shout us out for, you know, our editors for all the work they do to put together, you know, great shows like this. And there's some really wholesome, great people in the trading community. Don't let people tell you that the trading community is toxic. The trading community is only toxic if you're in the wrong circles. If you're out there in circles battling over whether or not fair value gaps and ICT is a waste of time or not, you're in the wrong circles. Come back over here. We got it going on. We're staying real. No nonsense, just fundamental analysis, technical analysis, and trading the markets slow and steady. Anyways, look at that. Gold up 0.77%. Really big push there. But really just trying to break through this high. We'll see what can happen on that daily chart. NASDAQ down 1.3%. So a little bit of a bounce coming in here. We'll see how price reacts there. If we get a really strong bounce today, I may take another stab at it. But again, going to continue to risk small on this one if I do take trades. But we'll see. Nick, we don't want to see people like Chris Pulver. Then you're in the wrong circle. Get out of here. You're going to see Chris Pulver more than you ever would have expected on this channel, because Chris has my utmost respect in the trading community. He is so real. He's so professional at what he does. And that dude manages like millions of dollars. So in terms of a real trader coming on the show, we are honestly very lucky to have Chris coming on. That's a wild comment. We don't like Chris Pulver. That's like the first. Everybody loves Chris. You are alone. So when you say we, speak for yourself, my friend. People love his commentary. We get so many good comments about Chris's content. I get text messages or DMs all the time on Discord, as you can probably imagine. And people are always telling me how much they love the shows with Chris and Frank and me. And, you know, it is a group effort. And if you don't like that we bring guests on the show, it's been nice knowing you. Have a great day.
You what?
Perfect.
I even help you see the light.
That's all I have to say for you. Anyways, VIX up now just 11%. It was up like 14. Silver's up 1.2. This is the thing about silver, though. Silver is right at resistance. This is probably from a technical perspective. If you get a break above these highs for silver, could be a positive signal. Oh, that's a good sound. I forgot about this sound. Let's listen to this one again. Ready?
You what?
Wow, guys, yields down 4.5% on the day. That is absolutely atrocious. I mean, this is good for the rate cut thing, but again, we go back to rate cuts. Are rate cuts good news anymore? And this is where you get the mantra, rate cuts always signal a stock market crash. That's where people are going to love to say that. I get that comment pretty frequently. Nick, why are you, buying stocks ahead of rate cuts when rate cuts predict stock market crashes? You got to be careful. Got to be careful with that thinking. I love this sound effect. I don't even care. You got to be careful with thinking that rate cuts are going to precede a stock market crash, because if that is your thinking, you missed the really important part. Rate cuts, it's not about rate cuts at all. Rate cuts, I look like Baron Trump. I don't think I look like Baron Trump. He's like 12 years old, isn't he? He's probably taller than me. Guys, I'm like 5'9" on a good day. So keep your expectations low, because Baron Trump, I'm pretty sure, is like 6'1,000". Anyways, with rate cuts, here's the theme. If rate cuts come along with serious economic slowdown. So I'm going to do a drawing, and I don't know where I'm going with this, so just bear with me. So let's say that this is our first rate cut. Okay, I'm going to do a drawing. So this is our first rate cut. Our first rate cut, let's just say we know it's coming at some point. Let's assume September. Okay. Rate cut number one is sometimes considered like the inflection point, like the stock market's going to crash once you get there. Well, let's think about this. The blue line is going to be let's just say interest rates. So interest rates have been rising. They've stayed steady for a little bit. And now let's say rate cuts start coming in. Now, in a rate cut environment where you get, actually, let's draw this again. Let's say we have rate cut hikes stalling out where we've been. And then let's just say that we get, wow, there he is. Look at that. We're best buddies. So if you get rate cuts that are slow and gradual, right? What would this suggest? Slow and steady rate cuts would suggest a soft landing. But then let's talk about scenario 2, fast rate cuts. Not good. Why? Because, so let's say this is scenario 2 and this is scenario 1. Okay. These are rates. We're going to do a full drawing here. This might be worth clipping and making a video out of this on the editor side. Actually, I'll let you know because this might be a terrible drawing. It might be a good drawing. We'll figure that out. So if rates go up and then they go flat and then they start coming down slowly, we would call scenario number 1 a soft landing, because what this would usually entail is that economic growth during the rate hike cycle, what happened was growth was pretty strong and it kept going. And then it sort of lagged the effects of the rate hikes. And now this is where we're at. Now, this is growth. Okay? Growth. The economic growth during the rate hike part was very strong. There's a ton of stimulus injected into our system during the COVID lockdowns. So much money came in. The reopening trade, inflation was hot, growth was hot, but then growth has started to slow. I would say we're right here. By the way, we are here. Let's get a unique color for this. Pink. We're right here. It's like when you're on that sign, or like when you're like at a theme park or like at a national park or something. Here's our "you are here." You are here. Okay. So we're right here. We don't know what's going to happen. In fact, what I'm going to do really quick, I'm going to make these dotted lines because these are possibilities. Okay. Let's go to all right, growth. With growth, sorry, I'm really getting into this drawing and it's got to be right. Otherwise, okay, growth is really strong, started to taper off, and this is where we're at. Okay, now, if we get from here, growth staying moderately, well, let's say it kind of flattens out. Growth flattens out into the first rate cut. If we get scenario 1, the expectation for growth would be for growth to expand. That's the soft landing, right? If rate cuts start to happen, growth stays good, inflation stays cool, then that's great. But if you get scenario number 2, where rate cuts are happening fast, that's because the economy, let's also make this, instead of just growth, we're going to make this eco/growth, because it's kind of the full encompassing economy in summary. If the economy's good, if it's hanging in there, then we'll see scenario number 1 be a great scenario, would be a soft landing. If you get growth falling hard from here, that is going to be scenario number 2. Okay, scenario number 2 is the hard landing. Hard landing, soft landing. Hopefully this is making sense, but I just wanted to break that down because it's really important that we understand the difference. Today was a win for the hard landing camp, because today we saw economic growth hurt because we saw jobs data come in very, very weak, which would maybe suggest maybe we're seeing scenario 2 start to form. If we had seen really good jobs data today, the market probably would have celebrated, saying we're probably going to see scenario number 1 occur, which is more of a soft landing where jobs data stays strong, the interest rates start coming down, and growth actually expands. I still think that that is a possible scenario. Today's singular print does not tell me, oh, it's time to get super mega bearish, hard landing for the win. I'm not changing teams entirely. But yeah, you have to be careful thinking that a soft landing is guaranteed or a hard landing is guaranteed. We don't know. These are projections. These are ideas. These are forecasts. Something to think about. Okay. Where do I lean? Well, today, I will admit that I was very on this camp, which is why I'm having a red day, by the way. And I would like to be 75, 25%. And when I say these percentages, what I mean by that is allocation of my portfolio. Because although I am a trader, I trade with a portfolio mindset. So even though I'm in and out of positions, I still want exposure to the soft landing, which, by the way, what is soft landing? What would do well in a soft landing? NAS, Russell. I'm going to put RTY for the symbol. And, maybe some commodities. And when I say commodities, I'm not talking about just gold, because gold I'm talking more about like silver, copper, things like that. And also real estate, right? The high risk stuff would do very well in a soft landing. What about the hard landing camp? Well, there's two, and that's about it that I can think of. I mean, number one, the best performing one would be shorting the stock market. But the question is, how sure are that you're going to get into a hard landing environment? I don't think we're going to enter a absolutely hard landing. I could be wrong about that. And I've been wrong about that today, with increased probabilities of a hard landing. But in this case, TLT, which I'm pissed today because I sold out of TLT. Shoulda, coulda, woulda. My man, that's a frustrating one, right? Because I sold TLT. Give it up for me. Shout out Nick for selling TLT at the absolute worst time you could have possibly sold it. They should give me a plaque. Sold TLT, held TLT for the longest period of time just to sell it at the worst period of time. So a little frustrating, because I was kind of leaning more and more into the soft landing camp. Now today, TLT would have been great, would have been a huge hedge to my account. And I also like gold. So I want some exposure to gold primarily. And yeah, that's going to be my drawing for the day. Somebody print this out and send it to me so I stay on course. But yeah. If the Mag 7 starts to plateau, then red flag for overall stock market. Absolutely. How would healthcare fare in a hard landing? Lee, that's a great question. It would be pretty good. At least in terms of like a historical perspective, healthcare would be a better spot to be in than a lot of others. That's for sure. Funny thing is, people have been waiting for this pullback all year, and now everybody's scared. Quentin, I kind of agree. I mean, this is the pullback that I've been waiting for. The problem is, I haven't been very good at waiting for it. The problem is I've been a little early trying to get in on this. I bought here, and I bought here. So I've taken 3 attempts, 3 L's back to back.
Perfect candle. That green candle right there.
Yesterday, or 2 days ago, was absolutely a perfect candle. Man, that day was good. Can we just go live that day over and over and over?
Perfect candle.
What a wild day that was. Up 3% on the NASDAQ for the day, and then gave it all back yesterday and followed through to the downside today. Really crazy. What's your P&L this year, Nick? I haven't done an updated performance review in the last few days or last few weeks. The last one I did, admittedly, was when my account was doing really well. So if you'd like to see my P&L before the recent sell-off, you can watch that video. It's on the homepage of my YouTube channel. But recently I haven't checked my overall drawdown, but it's been not fun, but I got to say, I've done this for a long time. And one thing that I've learned is that drawdowns are always a little bit nastier than I expect them to be. So my position sizing accounts for it. So what I mean by that is, if the stock market is selling off and I'm bullish, I'm not going to get wiped out by this move. So even though you could say I got long here, 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 I wasn't long at the top, but you could say, Nick, you were dead wrong on this move. And I was. But I didn't get killed by this move. Did I give back some profits on my year? Yes. But I didn't get crushed on this move. And the only way you can say that with confidence is if your position sizing is appropriate. If you have to ask yourself, does 5, 10 losses in a row, is that going to kill your account? If the answer is yes, your position sizing is way too big. 5. Somebody asked me on a video, they commented yesterday and they said, Nick, would 10 losses in have you ever had 10 losses in a row in your account? And I said, their full comment was like, have you ever had 10 losses in a row in your account? This would tell me a lot about like what I should expect as a trader. That was their comment. I thought it was a great comment. And I responded back and I said, yes, multiple times. 10 losses in a row, especially if you're like me, where you are trying to be a trend follower, you're trying to trail stops, and you are also relatively looking for, good risk reward trades, meaning small stops, big targets, or trailing stops in my case, then guess what? 10 losses in a row is not rare. It's going to happen. It's not all the time for me. They're never fun, but they're very, very much expected for me to happen. By the way, dollar Swiss, holy crap. This is my one thing that's really going well right now. Everything else, not very hot. But this trade has been just falling to pieces, which has been nice. I've been able to hold on to this one for a minute, which has been awesome. But the reason I brought this one up is because you asked about, drawdowns. What's an appropriate number of losing trades? What's a losing streak look like? Well, with this kind of risk to reward, as you can probably imagine, I usually take many attempts before I catch this kind of move. So when you see me talking about this trade, I just want to be transparent with you and let you know that for me to catch moves like this is not my everyday, accuracy. This is a rare occurrence where I get a really good move going, but I usually have to take a couple attempts in order to get that. Dollar Swiss was a bearish setup on the Edge Finder. I think it is again. There it is. Bearish setup on the dollar Swiss. I waited for a pullback. I set up the technicals. I took the trade, and I've been trailing stops in this one. Dollar yen has also been a bearish setup, and I ignored that setup, and I wish that I hadn't. But at least I got dollar Swiss. They're moving together for the most part anyways, dollar Swiss, dollar yen. But yeah, yen really strong right now. Swiss franc really strong right now. Kind of crazy stuff. NASDAQ's back down towards its lows, about down 2%. I personally would like it to go a little bit lower. I've stopped out of most of my positions. If it goes lower, I'd feel a little less bad. And if it goes higher and we get a strong wick off the bottom today, I might try again. But I'm going to keep watching the NASDAQ, keep watching the S&P 500. But really, the only one that's showing up on the Edge Finder as a bullish setup for me right now is the Dow Jones. So I've got to be picky about if I'm going to take a trade on anything else. I've got to be very picky. But the Dow, I'm still in my Dow trade. Value against my own judgment, the Edge Finder was smarter than me. And that's kind of cool because I was long the NASDAQ. The Edge Finder was most bullish on the Dow Jones. Edge Finder was right. Nick was wrong. So we'll see. But look at that. I'm about break even. Sure, I've given back a ton of gains on this move, but I'm still in the Dow trade. This call was so much better than my own calls, and I also missed the dollar yen. Maybe the better call for me would have been to just listen a little bit more to the edge finder and size up my trades a little bit better. Maybe that's the one mistake that I made in this recent round of stuff. Anyways, while we're on the subject, the edge finder is currently 55% off. Today is the last day to get access. We're ending our summer sale at the end of the day. It is currently 55% off to get access to the edge finder. Don't miss that discount. It is the best one that we're doing all year long. No cap, as the kids say. It is the best discount that we're doing for the entire year. It won't go lower than that. So if you've been thinking about getting a copy, this is quite literally your last chance for 2024 to get access for 55% off. Don't miss it. Take advantage of the discount. Click that link, chat with a rep. They can get you set up with discount and answer any questions you might have about the tool and its functionality. All right, guys, we're going to just take a quick break, and then Chris Pulver is coming on to talk charts. He's going to take over the stream for a little bit, and I've got to run to the restroom. So we're going to leave it to Chris, and he's got it from here. And stay tuned. We'll be right back just after this. Wait a second. What is that out in the water? Is that a shark?
Yeah, thankfully he only took half off my surfboard.
The markets can be a very scary place. Don't go wading into treacherous waters without your edge finder, which gives you market data like the commitment of traders data, retail sentiment, our top setups algorithm, which generates ideas each day for you, and so on and so forth. If you don't already have a copy of the edge finder, we're currently doing our summer sale, and it is our biggest discount of the entire year, no questions asked. If you're waiting for a better discount, you won't get it. Currently, the edge finder is half off, and for stream viewers who are watching right now, we're going to be dropping a link in the chat as I speak, and that link will take you to a direct message center where you can speak to a rep on our team. That rep can get you 55% off so that you're no longer swimming out with the sharks. Get inshore and trade with the edge finder. Check it out, and thank you guys for watching. Back to the show.
Hey everybody, happy Friday. How's everybody doing today? One thing, just give me a second here. So, does anybody know the song by Deep Purple, Smoke on the Water? Because the first thing that comes to mind today, let me share my screen before I'm just looking at a sea of blue, would be Blood in the Water, because that's what everyone's seeing in the markets. All right. So the dollar's down in a big way. My dollar basket trade is starting to show up and pay out really nicely, which that's always a good thing. So Aussie dollar long, Euro dollar long, pound dollar long, New Zealand dollar long, dollar CAD short, dollar Swiss. I'm still long. Okay. That's a carry trade, dollar yen short. The basket's paying out pretty nicely today. Oil threatening my 72.50 a little bit, but gold is up. My GLD position is doing fine. Silver is still hanging in there. My SLV position is fine. Bitcoin, honestly, like kind of unchanged considering the stock market is gapping lower. We had like 2+% gaps to the downside on the Nasdaq today. We had 1.4, 1.5% gaps on the SPY today. You're looking here like just a nasty sell-off day. The IWM, the Russell small cap, has given back about 10% since the high Wednesday. Crazy. But I do have a list of things that I was just doing a full live session for the last hour or so. It was like 55 minutes, and a lot of people come back in to see some more. I do want to get to some more symbols today, some more assets, and do some more analysis. But this is the list of my to-do. So I did get assigned on Google and Tesla. I don't want to own the shares. I'm going to keep the buying power high for opportunities like this. Okay, so when I show Google, for example, trading at 166, I have a 170 by 172.50 bear call spread for $1.75. My week so far, if I show this here, so I have Meta I'll add it up on my calculator here. So I'll have about $1.10 profit on Meta. I have a 60-cent credit on MA and a 60-cent credit on Qualcomm. I'll have $1 credit on Tesla and another $1 credit on on Google. So that's $4.30 credit per contract. I have Pfizer that's going to get called away today for about $2,500 profit per account. So that's about 17 grand or about 17.5. So right there, like, so the week itself, I mean, it's fine. The fact that things are dropping, and look, I've been positioned for this for the last month. Hedges I've had on. I have hedges in ES and hedges in NQ. So if I show those positions, let me go all my accounts here. So I have a E-mini futures hedge that's up around $2,500. A gold play that's up. This is gold futures up $4,600. I've got an NQ. This is Nasdaq up around $8,000. I also have some out of the money puts. A lot of those are paying out nicely. I have some broke wing butterflies on the Russell that might end up paying me with the trap profits. If I go to the RUT, okay, RUT is showing a downward move, but I'm looking at a 2100. Hopefully a pin price by the end of the month. This has time in the trade. There's no assignment here. I'll be watching that closely. RTY is about break even, but I have a pin price here around, what is this one? This one is an 1875 pin price, like another like 9 to 10% lower on the RTY. So I have hedges on all the major indexes. I took some trades today on SVXY, which is a lot like trading. It's a combination of trading the S&P with volatility. So I'm doing some puts on SVXY, collecting some premium. I don't mind owning this as volatility retreats. Then this starts to head back up and we'll probably make new highs and then have another split later on. So this was a 2-to-1 split back in April. So this was trading up around $100. I've been in and out of this SVXY for years around this like $30, $40, $50 area. Gets over $100+, it splits, same type of thing. So anyway, let's see. You got some questions coming in here. Can we see your buy or sell positions? Yeah, I mean, what do you want to see? I will. I mean, you can. I've got a lot of stuff going on here. Just this week, like I said, the trades that I took some profit on. So I took some profit on some earnings plays. I'm going to take losses this week. That's going to happen. I'm going to take a bull put spread loss on Apple. I'm not going to take the shares yet. I'm taking a bull put spread loss on Amazon, but I just closed out a hedge on Amazon for $20 a share. I own the shares right now at 117. So I've lowered my cost basis by the $20 on Amazon. My target is still all-time highs at 210, 205. Fair market value with a discounted cash flow on Amazon is $329. It might take a year or 2 or 3 or 5, but if I own the shares, let's just say over the next 2, 3, 5 years, whatever, it doesn't matter. But 329 minus 117, if I did nothing on Amazon but make $212 on the shares that I have, I'm going to make $100,000 on Amazon. Does it take me a couple years to do it? Probably. But is it worth it? Yes. Manage your trades. I have a core position in Amazon. I'm using options to lower my cost basis. There's money to be made. Okay. I look, when I started buying Amazon, same thing with Apple, same thing with all these, Mag 7s. After the splits, does anybody think over the next 10 years, does anybody think that Apple could return to $1,000 a share? Does anybody think that Amazon could be $1,000 a share? Or Google or Microsoft? I think most of you would logically say, yeah, that's very possible. Why? Because they're the biggest companies in the world. They'll continue to be the biggest companies in the world. And I think as we move forward, we might see some more agility with private capital and private equity, but not necessarily this big push into becoming a public company. So I do think that when big companies like Apple and Google and Amazon and Microsoft, when they see competitors, they buy them, right? So they should stay Mag 7 and they could be in the top 10, top 20 in the S&P for a long, long time. So just saying, longer term, I think that, they'll be fine. They might be one of the only consistent gainers we have as the US is clearly leaned towards a high concentrated tech market. But the Nvidias of the world and things like that with a little bit more volatility and uncertainty, and that's another discussion. But we've had these be cornerstones of the market for many, many years. And anyway, I'm just saying, I have core positions. I'm sticking with those. Opportunities like this to me are buying opportunities. I know that seems crazy because it feels terrible, right? Like this market's falling. And what happened today? Non-farm was a huge whiff from the US. And I'm not sure if Nick talked about this on the session, but I'm sure he mentioned with Edgefinder, #1, huge sale for 55%, which is awesome. And you can use the promo code Pulver if you'd like to. I would appreciate that. But the US was a big miss today. We had 176 forecast. It came in 114. The revision from 206 down to 179. We also missed on average hourly earnings, so we missed by 1/10 of 1%. But the big one here is the unemployment rate at 4.3%. So the first thing I went to was the Edge Finder and unemployment. And take a look at this trend. This is not good. And you know what the first thing was that I said? I said, I think the Fed's probably going to look to cut by 50 basis points now. And I said that wondering if the CME Watch tool would reflect that. And sure enough, take a look at the CME Fed Watch tool. This has shifted from a 80 to 90% probability of a rate cut in September to now a 62.5% probability that they're going to cut by 50 basis points. That is crazy. This is saying, look, this is the market saying the Fed is too late. They should have already cut, right? But they didn't cut in July, and now they're possibly going to have to play a catch-up trade and get a catch-up cut in September. So it still looks like the market's going to be expecting a September 50 basis points cut, a November 25 and a September, or sorry, November and December 25 cuts. It's crazy, man. Like, look, the Fed predicted, 2 to 3 cuts for the year. We're still going to get 2 to 3 cuts for the year. But now, if they get more aggressive with a 50 basis points cut, we might have a 1% difference. And what else is ripping right now as yields are going lower? The bond market tends to front end this type of curve. If the yields are going to go down aggressively and the bond market's going to price it in, we're seeing some big moves in bonds. TLT is up. I mean, look at this just in the last week. This is from the 25th. I know this isn't going to get anybody excited, but for bond traders out there, being up 6.5%, you're like, oh, baby, this is my risk-free rate with some appreciation. Okay, I've got an $82 long call that's up in profit. I did measure a move on bonds. This is TLT. I will close my position on TLT probably at $105. Okay. All right. Price action yesterday. I posted that in the chat for you. I looked at RBC. I looked at RY. I looked at something else. I posted that in. I actually took a trade on TEVA because of you. I put in. I think I did a long call on TEVA. The other ones I don't want to wait for pullbacks though. I looked at RY or RBC. One of them is like Royal Bank of Canada, right? I'm waiting for pullbacks. But TEVA I did take a trade on. I put in a $15 strike, a long call out to January of 2026, and I sold against that a December 20th of this year, a $23 call. So I'll do the math on this. I'll show you what it is really quickly. So I paid $5 for the trade, and I took away 31 cents on credit for the sell call in December. My debit is $4.69. Okay, so remember that number. If I go from 15 to 23, that's an $8 move, okay, minus $4.69. That'd be, I guess, plus 469. So I'd make $3.31 a share on the two contracts. I'd make $662 if the price is above $23 by December. If it's not, I'll just keep going out, selling calls, lower my cost basis on that diagonal spread, maybe 20 to 30 cents every 60 to 90 days. And hopefully turn in that $15 call for free, or try to get to it as free. I'm going out as far as I can, but TEVA, I did like the, short-term opportunity. I'm not paying a bunch of money for it. But RBC, RY, I'm going to wait on those. I think those need pullbacks. Okay. All right. So let me take some requests here. Calling the yen pairs. Thank you. Look, the yen is unraveling. My FXY, and look, I wish I was more aggressive on the yen pairs. I really do. In currency trading, I wish I was loaded up to the gills in the yen crosses and short like crazy, but I'm not. And what I did instead is I just bought shares of the FXY. And so I'm up probably $3 a share, which is fine. It's not a big position. I think I have like 200 shares in the FXY. Let me check here. FXY. I've got protection on the 58 by 50. I've got 100 shares, 50 shares on this account. Oh boy, that one's missing out. 1, 2, 3. All right. So I got 100 shares running. Look, the yen to me wasn't going to be like this big deal. It's like, look, the yen's going to, get stronger. That's fine. This is a big risk off trade right now. That's fine. If I turn a yen pair from a $60 break even to a, $72 to $75 price on FXY and I make 20% of my position, it's fine. Like, it's fine. I'm not like putting, all my eggs in the Japanese yen basket. That is the last thing I would do. I mean, look, I've been trading currencies for 15 years. I can tell you for a fact that the most money I've made is by not trading the yen. Period. The yen is great like this when it's easy to follow, when there's tons of volatility and the scalpers out there and the day traders are getting just tons and tons of movement, and it's awesome. But it is a shit currency pair to trade. Because if you're a currency trader, you like technicals, you like efficiencies, and it's not that currency pair. It's not that basket. It is a weird, fundamentally driven, wild currency. It is my least favorite. Okay. Which is why I will analyze yen pairs, talk about yen pairs, but I don't love trading them. Because if you're not on the right side of the yen pairs, it will absolutely destroy you. And the good thing is I know a lot of traders out there in the retail side that have been getting crushed for the last year trying to short the stupid yen. Oh, dollar yen's going to drop. Where's the intervention? I mean, that's a crazy mindset to be like, I hope the central bank bails me out. So I just said it's not a cooperative, it's not efficient, it's not a technical currency pair to me. Now, maybe that's just me. And also, I hate trading it because sometimes it moves at 11 p.m., sometimes it moves at 2 a.m. That's not the time I want to trade Forex. Okay. So anyway, that's my rant on the yen crosses. But what are they doing? They are just unloading. Okay. They continue to unload. So if you're scalping this thing, just keep scalping, and just I'm moving the fibs down. Look, at some point, this giant drop is likely going to have a ridiculous snapback, and that's fine, but I'm not interested in calling the bottom either. I wasn't interested in calling the top. I'm not interested in calling the bottom. All this did on the yen crosses when we had this intervention high is flush out all the I guess in this case the sellers, and then just drop like crazy. So everyone that's been asking and begging for the yen to get stronger is happening. I hope you have the cojones to hang on to it, because if you do, it could pay really, really well. If you're already break even or better, I would personally be moving stop losses already. I do not trust the yen at all, ever, which is probably why I've been successful in Forex trading, because there's 21 other currency pairs that I can focus on and trade that I make a lot more money with. All right. So just my thoughts. All right. Okay, we good? So let me just take a look at my little poll report. So S&P is down over 2%. Qs are down over 3%. Russell down almost 4%. Dow's down 1.5%. VIX is up to 24.88. Big, ridiculous rip on the VIX right now. I was looking at this earlier this morning. If we get up into the 30s or 40s, do we have another 2008 on our hands? I don't think so. Do we have another 2020 on our hands? I don't think so. So more than likely, I'm going to set a chart alarm here around 30 to 35, and I'm probably going to take a sell trade on the VIX. If we get to 30 to 35, I'll set a chart alarm here around 35. I'll go 32.50 and go halfway. I'm going to look to sell the VIX. How? Probably just a bear call spread. But if I do a bear call spread, get about 30 cents on the dollar. Let me change the color here. If I get about 30 cents on the dollar, okay, if I put in, I don't know, 10 contracts, and I can generate, a little profit there by the market likely reverting. I mean, this is an instrument that has lulls, expansions, and reversions, and they happen fast. So, where am I at in the SPY? Well, I said, and if you watch the video, look, I post this on YouTube, I post this on Twitter. You can check out any of my stuff. It's like I share what I'm doing, and why is that? Because I'm a retail trader just like you. And, I think everybody can use some help, and it helps me just be more transparent and be objective and, take considerations where it's like, if I'm sharing my ideas with people, it's like, I'm really picky about what I share, right? In a way that I'm picky about what I trade. Okay. So I've called for a 7 to 12% correction in the SPY, right? Right now, based on current price, we're down about 6.18%. Remember, 7 to 12. That's a big window, okay? So if we creep up to 7%, here's what I'm going to do. I'm going to put on a trade right now for the SPY that's not going to get filled, but I'm going to put a pending order here, and I'm going to put a trade down here on the SPY also. All right, I'll do this right now with you in session. So this is a 525, and what I'm going to try to do on the SPY is, hang on a second. SPY is here. All right, so let me check something here. This one at 17 and change. I've got some puts that are running wild to the end of the month. I'm going to keep an eye on this one. Otherwise, this is a bear trap trade. Let me get one thing here. Check this out. So if I go NQ 1, 2, 3 and analyze this chart, where's current price at? Current price is right there, 18. So I'm in profit. I'm in credit on this trade. And if I zoom out, there should be a big profit trap that I'm in right now on this position for around $2,000. And there's my line in the sand coming at you shortly, right there. So I still have, I'm in a bear trap zone right now on this NQ. So if we stay above 17,000, which if we drop to 17,000, let me see what that is on the NQ, by the way. And then I'll do some more requests, which I see these all coming in, so don't worry. 17,000 would be if the NASDAQ is going to drop by another 8%, 7.6 to 8%. That's my bear trap playing out. So there's a little pain in that trade happening, but my bear put spread is showing, max profit of around 10 grand. So I'm just going to sit on that for right now because I want to see, does this trade, and this is where it's going to be a little sketchy, does this trade offer what is resistance to become support? Well, we better figure out in a hurry that these bulls are ready to step back in, because if this thing starts to unwind, high, low, lower, high, lower, low, if this thing starts to unwind and starts to challenge this low right here, then I think we're putting in a pretty severe test of, man, this top might be the top for a while, you know? So anyway, I'm just noticing that, one is up around 10 grand, one's down about 9 grand. That's just because my naked put is exposed around 17,000 and is dropping and volatility is up. So that delta is changing very rapidly. But like I said, I'm just going to chill on it for right now as the other one is hedging and playing out. My ES trap is going pretty well. This one, I have the bear trap starting around 5,500. It's currently in full profit, looking to maximize that, and my strike to the downside is 5,100. So the S&P could drop another 4 to 4.5% before that trade becomes threatened. And I also have a way out of the money, kind of a black swan hedge at 48, which pays like 20 to 1. So actually, it might pay more than that, but I think I did 2 contracts where it's about a 1% risk for about I want to say 10% hedge. So even if I'm just, and again, I realize that making profit on a black swan hedge can just do a bunch of washing. Like I could have a drawdown, it could wash the drawdown so my watermark stays about the same, So anyway, just saying. All right. Let's get back to some charts. So here's I'll just go back to the poll report here, just watching things, obviously things are getting pretty ugly today. But I still have stuff to manage. By the end of the day, this is my list. So I'm going to take a look at some symbols right here. Apple, Amazon, Qs, IWM. Those are going to be small bull put spread losses. I am going to put on a trade with the SPI right now with you in session. Tesla and Google, I'm going to take the full profit by the end of the day. I could just let the bear call spread expire worthless, but I'm going to have to get rid of the shares that I own as well as the long put in order to wash that 75-cent loss. So I'll take the $1.75, take the 75-cent loss, take my dollar net profit. And so the result would be Tesla closing for profit and Google closing for profit. And Pfizer, if it stays above 31.50, that will be closing for profit. FXI and KWeb, let me take a quick peek at those. FXI is going to be another repair. KWeb has to stay above 20. All right, so I'm going to carry those repairs over another couple of weeks. No big deal. I'll just do it week to week. I'm lowering the cost base a little bit. I'm in profit by about $1. I'm not really looking to hang on to these shares forever. I'm just trying to repair. China is, probably for another time. Like if China comes all the way back down to retest, KWeb is a large cap China ETF. It's kind of the tech play. But this level or this level, this breakout is still showing corrective signs. So if and when we, start to break up, like this looks a lot better. But until then, I'm just going to do some, near-term repairs. I was interested in taking on some shares of Google and Tesla, but I'd rather put the buying power on the indexes. Okay. So anyway, let me go into the SPY. Okay. I want to get a couple trades running on the SPY, and then I'll take some more requests. So what I'm going to do here on the SPY is I'm going to look out to like November, December. If I get a 525, let me see what I can do on this one. So I'm going to go SPY. Table positions. All right, let's go SPY. So if I go SPY, and I'm going to put in a pending order, my strike is going to be 525, and my strike's going to be 500. So 525 and 500. So if I go out to SPY, I will go to November, December. I like these. 525 by 524. I'm going to see if I can get filled on this for 50 cents. Okay, I'm going to go 45 cents in this one. And I'm going to do a 5 contracts. I'll do 10 contracts here. Okay, so a 525 by 524. Try to get filled for 45 cents. This is going to be pending for right now. I'm going to keep an eye on this one. Okay. Ugh. The dog wants to say hi. All right, so 45 cents. Hey, what's up, Frank? How are you?
Good. How are you?
Good. Are you kicking yourself that you don't have your queues running still?
I sold my last put this morning.
Okay.
I'm happy. It was a very out of the money call or out of the money put that ended up working out. So I can't really complain, but that was a crazy move. So
yeah, I mean, this has been a crazy week, dude. I think, correct me if I'm wrong, will you check, while I'm putting these trades on, will you check the size of this week's high to low so far on the Qs and see if it's bigger than last week? Last week was like $28. Yeah, from high to low this week, is it more than last week? Is it over like $30 from high to low?
It is. Oh, wait, I'm sorry. I'm not on the Qs. I was on NAS. So on the Qs, it was 30.8.
So it exceeded last week. Wow. Crazy, man.
Well, the beginning of this week was or actually it was just Wednesday. You saw this like hammer candle that looked like we were about to turn all the way around, only to give that all back yesterday. And today is just another sell-off. NFP came in super weak.
Yep.
I didn't think that would necessarily cause anything, to be honest. But I guess we're in some sort of, I don't know, this feels recessionary almost. I think
it does. I think the Fed,
this.
Did you hear what I talked about with the Fed this morning? Did you see that the probability is now 50 basis points cut for September? So the market's like, you guys are idiots. You guys missed it. You need to cut by 50 basis points now because things are looking way worse. I thought that was really interesting this morning.
This is the bad scenario because the Fed is going to cut because they have to.
Correct. That's the like hardish landing because now they're cutting because something's breaking, right? Yeah, our economy is showing signs of struggle, and now the Fed's going to step back in.
We're at 4.3% unemployment.
Yep.
We were 4.1 last month, and it's just showing some acceleration. And I think now that we've broken under a certain level on the Qs and just on the markets in general, I think the Qs have. I've been saying they give back their gains for what they've made this year. But I've been saying that since like, I don't know, early summer. So, and then we were talking about it and I think you said the higher it goes, the worse it will get.
Yes. For unemployment.
So it's getting worse because we went so high. Now we're giving it all back. If the Qs go down, 13 more points, we'll give back everything. That'll be the 200-day moving average on the NAS, and that'll be January prices. Honestly, I think we could see that last flush there. And yeah, I don't know. I'm still not confident in what we're seeing, and it looks like things are breaking. And it's a similar pattern from 2008 when we saw yields come down really harshly, but the market came down with it. So this is like that bad scenario like you're talking about. Yeah, it just doesn't look healthy. And small caps are getting killed too.
Yeah, I mean, that was well, I mean, I got a little aggressive on Russell, but I did it with options. So, I mean, if I have to eat Russell this year because it's not ready to come back, that's fine. I mean, at this point, I just wonder, okay, so the Fed's going to be aggressively cutting. We're going into an election year. Is the market able to save itself from the asset bubble it kind of created with a Mag 7, with high concentration, with a narrow rally? Yeah, man. I mean, the reality is like things might not be great, but you never know. You never
Yeah,
know. Who knows?
I don't know. I don't see anything on a technical level that will tell me that we should turn around until we get to the 200-day moving average. So
Which is where and what instrument are you talking about? SPY or Qs?
I'm looking at Qs.
Okay. Where's the
430.
what price? Where's the 200 value at right now?
It's at 430, and then
430,
500
okay.
for the SPY.
500 for the spot. Yeah. So I'm putting in some bull put spreads right now. I'll share those in just a second. Let me get these in so I can just. It's not super easy to multitask with all these accounts and just making sure I do it correctly. So let me get in my expirations. I'll talk through this in just a second. So I've got 4 more accounts here. All right, 9151. All right, 2 more. Okay, so I am putting in a 525 by 524 bull put spread for 45 cents credit, and that is November. And I'm also going to look to put in a 500 499 bull put spread for 45 cents credit for November. I'm going to do the same thing for both November and December to see if either of these levels, if there's going to be any resumption. Are we really that far off? Are you looking at the daily 200 or the weekly 200?
Daily
200. Wow, we have that much space, huh? Let me get this other workspace up. I have the 200 on mine. Let's go load. Let's go.
I'm just saying that if this is a true correction right here, this is where things start to fall apart. Obviously, we have been 10% off the highs before this, but the fact that it opened the way it did today, that's just showing that even if we don't get a direct move lower, I think that's just where it's going to end up.
Yeah, I mean, now that I'm pretty sure this is the 50 period. That's the 50 period, and then I have my
under the 50.
Oh, for sure, yeah. Like this. So
we tested
this
it
is
yesterday.
very common. We tested the 50. We broke below it. This gap is likely bringing in. I've got a 144 and a 200, but absolutely, like that would be if we're going to see support and holding. That would be where I'd likely see it. So yeah, I mean, we're definitely in some legit correction territory. This goes right in line with what I talked about. I mean, I thought we'd have a high, low, lower, high, lower, low. This level made some sense to me. This level makes a lot of sense to me. Watching this 144 to 200 dynamic support. But yeah, it seems to be in free fall. We got some gaps. And look, if we settle back in here, Frank, to about $500, I'm probably going to go back after a gap fill. But I'll start with options. I'll start with credit spreads, but I'll probably get something a little bit more directional, even in the interim, and just have a defined risk. Like if I pay for a call option, I mean, if I buy, let's say 60 to 90 days, I can do something in the money, get kind of a 70 to 80 delta and try to fill that gap over maybe a 3-month window or something. I don't know. We'll find out. But logically, that would be the most obvious buy zone would be if we kind of, trap the bears or maybe get the bears a little bit overexcited and see if the bulls are really against the corner. But man,
so once we're there,
it's happening fast.
Once we're there, or not once we're there. If
Yeah.
this happens,
Yeah.
we're seeing like a 15% correction off the Qs.
Mhm.
I would have to be really patient though. I would like to see it hit that 200 day, and I'd like to see something on a technical side. I'd like to see some reversal. Just showing me that it's holding up here.
Yeah.
So I feel like a daily candle, if it could, pull back and hit like I like seeing hammers. So if it shows a bullish hammer pattern, I think I would like it. But if it just closes at it, I don't really know. I'd have to see more. I don't
You want to see it
necessarily
close back
think.
above it, right? If
What'd
it
you say?
if it closes below, then you want to see like a close back above, and that's kind of putting in the bottom. So either it hammers off of it, or you're looking for a close below to then give us a close above, and then you're resuming, potentially resuming the uptrend.
I'd like to see it dip below in the middle of the day and then come all the way back up by the end and show a hammer. So
Or
like,
or in classic fashion, it just gaps like $5 to the upside.
yeah,
Like it hits it Monday, and then Tuesday it gaps up $5 and never looks back.
yeah. So that's the problem is once it starts buying again, you have a very short window to get in if you want to get in at the lows.
Agree.
So I don't think that these are the lows. I'm hoping they're not.
I don't think they are.
Because
Look, SPY 7 to 12% window correction. And we're creeping up on 7, so like that's right in that window. Like ideally, if I get a 10% correction on the SPY, I'm super happy to be a little bit more bullish. And if I get a 12.5 to 15% correction on the Qs, I'm more happy to be bullish. So I will test. I will test these areas. My Qs, I've got it written in this one here. So the 450 by 445 is filled. The 420 by 415 is pending. I'm watching those trades. I'm going to put in some December credit spreads as well, because that's right around the area that 200 is sitting on the Qs. Like I have it right here. We're sitting around this 433. So, I mean, if we're back above 450, like that's the nice thing about a credit spread is we're above it. That line in the sand is safe, and that's good profit. SPXY crossing $50. Whew. All right, we're going to get some premiums, dude.
crossing 50.
That's
like
that's SPXY. So VIX is just ripping today, man. Like, okay, dude. This is coming up fast enough that if we have this like screaming VIX of 30 to 32 and change, I'm probably going to do a bear call spread on the VIX. So I have a chart alarm set here around 30 to 32.50. I'm going to do a bear call spread on the VIX. Not right now, but I'm going to look at placing one.
I like that.
Yeah.
When the VIX goes crazy like that,
Yep.
I would say your odds are very high.
Yep.
But I don't necessarily think that it's going to be like a. What do you think the VIX can move to? I'm kind of kicking myself
40?
because.
I mean, do you think the VIX is going to COVID? I mean, we're moving to 80 on the VIX? Probably not. Like, I'd see this like 30 to 40 window as like, yeah, man, that's a scare. That's a legit scare. We're having, 6, 7, 8% corrections in a major index, 10+% corrections in a major index. So, yeah, I mean, getting up to 30 or 40, that's a big jump in volatility. I mean, going from arguably like decade lows, give or take, it's like creeping up these like super low volatility and super low volatility. It's been noted for months that the lower the volatility, the more risk you have by trying to stay bullish, because the upside just doesn't offer the same returns.
The VIX is up 49%.
Yeah, I know.
I
got to wonder here. I'm just curious, so I'm going to look back in hindsight here and kick myself a little bit. But my $20 call, it's double the price. So I got in for $1.66. Is trading for $4.30. That's what I wanted, was trying to get like a 300 to 400% gain on my VIX trade. But whatever. I still took like $2,500 of profit the other week.
I had a VIX vertical too that I closed out pretty early on, and
Okay.
it was, I think the sell leg was at, I think it was at 20. So
Okay.
I had it at, I believe it was 14. I bought a call at 14 and sold a call at 20.
Okay.
And I sold out on like this very first wave up to like 16 or 17.
Okay.
But now I'm just like, man, I should have held on to it because it expires on the 16th.
Okay.
at
Well,
this
your max would have been $6 anyway, but now you just be closer to max profit,
I
right?
made like $1 or $2, so
Yeah.
I
Yeah,
was
you're gonna
like,
max out at, probably right now it'd probably be trading for like 5 and change, close to that $6 max target. Okay. Look, man, everything is nasty today, right? But I'm watching a lot of things closely. I'm watching my hedges. I was sharing this earlier. This is my to-do list today. So I'm looking to manage. So my credit spreads that I took on earnings, Google and Tesla. If Tesla stays below 230, which it likely will, I'm going to take my $1.75 on the bear call spread, and then close out my assignment and wash the trade for $1 net profit. Google, same thing. I did take profit on 3 earnings plays this week. I'm going to continue to repair FXI. Pfizer, actually, we saw the healthcare space jump up today. Let me go healthcare sectors, the XLV. It is moving a little bit down, but Pfizer on the day. Son of a gun. Never mind. I had a 3050 call to get called away at 3050 for like $2,500 per account, and now it's back. It's fine, because what I'll do is I'll go right in tomorrow, or go in either later today or on Monday, and just put another 3050 in and just keep lowering the cost basis by maybe 20-30 cents. So it's no big deal. I'm just going to try to get Pfizer called away for some profit.
yeah.
So
Have you looked at gold? Because
yeah, dude, we're
I'm
creeping up to
currently in
all-time
a
highs,
gold
man.
trade.
Yep.
I
Oh,
own a
shikaka. That's a big old fake out too, huh?
Yeah, so
Wow.
I'm long GDX,
Okay.
and I have 2 positions on it. Right now, I am about break even on that, just because of the sell off.
So GDX, yeah, GDX. So I I don't know, man. I know that. So do you like GDX because it's cheaper, or do you think it's going to represent like the spot price of gold? Because I think GDX is going to be an underperformer compared to potentially a gold rally. If we have a gold
Yeah,
rally, then
I think I
GLD is going to
realize
perform
that.
better.
I realize that now.
Okay.
I was looking when gold spot was going up, GLD was doing the same thing, and
Yep.
GDX was actually slightly down on the day.
Yep. Yep.
I think, I mean, it's still correlated and I'll move with it. I've been in this trade for like a month, so I might just be looking to get out right now.
Okay.
Um,
What do you? You have tight? Are you tight to price right now with option play, or what are you doing?
I just own shares.
Okay.
I'm not
Gotcha.
doing any options on it.
Gotcha.
But
Gotcha.
I was thinking that today would bring gold higher, and it
Well, I mean,
obviously
it
has
was for a
not.
second. I was like, "Oh, look at this! Gold's trying to creep up to those highs," but man, it just whiffed. It just whiffed at those
Well,
highs.
this is why I'm like getting concerned, is because everything's dropping.
Yeah.
That's not, I mean, that's not a good
And this
sign.
is, dude, this is why currencies are the best hedge, man. Like if you trade FX, currencies are solid. Like your dollar's getting beat up. The dollar basket trade right now is coming into full force. So DXY, like, dude, any pullback, if you're not in a dollar pair right now, if we have this in a pullback, I'd say sell the dollar. Looks pretty good for a run down to 101. The JPY still looks pretty darn strong, which sucks because you're already 1,000 pips off the highs. So it feels terrible to be like, I'm gonna go into the yen pairs right now. But if you're scalping the yen and it's still strong every single day, it's a good scalp. It really is. But anyway, I think dollar basket is looking pretty good. Where now the Fed looking to cut aggressively because things are breaking. The dollar index is likely, I think 101 is very doable. So that's that. And again, I would still stop out if we have a messy trade above 104, 104.20. But if we stay this trajectory now and this thing's going to dump, this gives the market a chance to maybe price in a really big wave on dollar weakness.
So I don't trade currencies really, but when I saw Japan raise their rates,
Yep.
I was like, UJ is probably going to be dropping. And then today just exemplified that.
Let me see. So I think I can do something here on the. I'm going to do this. So here's another way to get some exposure on the dollar. And again, I can participate in Forex, but I'm going to take the UUP instead. And this is just a dollar index related ETF, similar to FXY. So I've been long FXY, and this thing is ripping and doing great. So I'm going to keep my FXY position long with the shares that I own. UUP, I'm not going to sell on margin. That's stupid. So I'm just going to take some bear call spreads. But if I do something like at the money, or maybe even in the money, let me take a look at this right now and get some. I can still express dollar weakness with an option trade. If I look out by the end of the year, try to collect enough premium, could I do a bear call spread 28 by 30 risking 28 by 30. It's a $2 spread. I'm going to see if I can get $1 for it right now. If I can, that'd be pretty solid. I'll get some, maybe put about maybe a 1% risk. I'm going to do this, see if I can get $1. And I mean, the spread 70 cents would be my bid, but I'm going to try to get a mid price here in the spread at $1. So I'm going to go after a little hedge where if the dollar gets weaker, the UUP should go down. I'm looking for the dollar to be weaker by the end of the year. So if we're below 28, right now I'm giving it a bit of a head start, but that's what allows me to get something in the money. How much lower does that have to go? If we get below 20, I mean, 28 is way the hell down here. So maybe that's not a good trade. Let me go 29 by 31. That's even worse. This is okay. These all suck, dude. 15, 20.
Are you bearish?
Yeah,
UUP?
I'm bearish the dollar. Yeah, right now. I mean, with this to me is a little bit more definitive on, and look, dude, it's a fine line because like if we're going into a shitstorm and a recession, the dollar might not be that much weaker for longer. But if the Fed is going to start slashing rates like crazy, this carry trade unravels quickly when the Fed's looking to cut by 1% by the end of the year. That's what the watch tool shows right now. 50 basis points September, 25. That's a 1% slash, and probably more to come into 2025. So
I'm now wondering. I know it's priced in now as like 50 basis points, but that can change in September.
of
Do you
course it
think
can. I know.
do you think the Fed is really going to cut rates? I know it's expected, but I'm saying like that still can do some damage because we're still not seeing inflation where we want it to be. So once you start that cycle, he's gonna have to keep cutting and just hope that inflation will come down.
Yeah, but if the market tips over into some like scary recessionary window, dude, you're gonna scale back in everything, right? All
Well, I
your
mean,
leading
they don't
economic
have to come
indicators are
in
gonna
and
be.
save us. They don't have to come in every time.
But what
I'm
do they do
saying,
every time, Frank?
what?
What do they do every time? What do they try to do every time? And this is the concern. I've said this. If they come in and save us, but it doesn't work, that's a bigger problem. But they still, in some capacity, have and do and probably will come in to save in some capacity. So I'm not saying it's the right thing to do. It just makes shit worse. But
yeah, they will do that most likely.
yeah.
But I'm just saying like that's not what they should do. And
Well, what they should do and what they are going to do could be very different things. What
I
they
think
should do is nothing because they should
just let it
be a free
happen.
market. Let it be capitalistic and let it be a free market. But instead, it's not. It's 30 plus years of heavy manipulation that you're either on board and you're not fighting the Fed, or you're not really paying attention to what the bigger fundamentals are. This market is heavily manipulated by what the Fed is doing. So we just went from a rate hike cycle to the most aggressive in decades to now maybe an aggressive rate cut cycle. And the cycles happen faster. That's what's nuts. It's like all this stuff, like if the market's getting a whiff of this right now, look at what's being priced in. Aggressive dollar weakness. The stock market's dumping like crazy for the last couple of weeks. And it's just, I mean, volatility's up 45%. Like these are crazy. This is big moves, man. This is why they say that bulls climb stairs and bears jump out of windows. Because it feels terrible when the market's falling, because it's like, oh my God, is this the end of the world? Is the financial market going to collapse? That's what it feels like when the market's down 5%. So,
yeah.
Anyway,
It's just not. It's really not that big of a move.
I know it's not.
So
I mean, in the grand scheme, it's certainly not. Yeah, it's not.
Just let it keep going and don't get in the way of it.
Right.
Let this be a healthy correction for once, and don't step in. We'll recover. We need to see this big flush out.
Yep.
But since we're super volatile right now, what about doing like 0 DTE or 1 DTE? What do you call it? Verticals, but you sell them above price. So like look at the open on the Qs. We had 453.
Yep.
What if you sold like a 455 that expires today? What would that be?
Yeah. So what do
Let
you
me
want? You
check
want to look
that.
at today? You want to look at like above today's open and do like a 450. Yeah, let's look. So I think the better trade would be this because it's going to be a little bit more pay. I did this yesterday, believe it or not. I was in the SPX, and through the SPX low yesterday, I did a 5400 by 53.95, and I grabbed $50 by the end of the day, or 50 cents per contract by the end of the day. And that was, a bit of a gutsy play. But I was like, I mean, we dropped, point wise, I mean, we dropped 2.8%. I was like, I think we'll be okay. I watched it to opening or to closing bell. Same thing today. It's like if we get enough premium here to sell it at like 53.80, let me see what this looks like. I wouldn't mind taking this trade. I think this is pretty good. What the hell is happening here?
What are
Where's all
you
my buying
looking at
power at,
though?
bro? What's that?
I'm looking at a 455, 456. That's only 13 cents.
Yep.
We
So
have this
I'm telling you, like,
conversation.
I'll look at the NDX. I mean, if you've got the buying power, let me look at the NDX because I would do one maybe at like 53.85. I'm on the wrong
53.85.
one. Sorry. No, NDX, my bad. Here. So if I did like a 18.625, 18.625. So I
I
can
don't know what that would be for the Qs.
I'll tell you. You're looking at the same thing I am. Like your Q trade around the there. So right now I could do a 18.625 by 18.630 right here and say that we're not going to close or touch this gap today. Okay? So if we stay right here by the end of the day, I will grab about $1 profit. I think
Okay,
that
that's
trade
454.
Yeah, so let's look at the same thing. So you're probably going to make about the same, like, percentage wise, if you go QQQ and look at a 454. Let's go
I
QQQ.
mean, I'm seeing 15 cents.
Yeah, it's garbage, but I'm telling you, you're going to make like 10 to 15% of the spread. So if you did a 453 by 454, you're making about 19 cents. If you want to slide those out of the way one more dollar, you're going to make 15 cents. So you're going to make about 15% of the spread. Is it a high probability trade? Right now, it's sitting at about 82%. I think the trade is fairly safe. Obviously, there's risk, but I'm going to do this trade right here. I'm going to go NDX. Okay. I'm going to go NDX. I'm going to take this trade for around this 18.634 and I'm going to try to grab about $1 out of this if I can. So I'll go NDX and 0 DTE. And 18. So right here, I can grab about $1. Let me see if I get $1 out of this one. Review, send. Come on. So right now it's trading for, all right, I'm gonna leave it pending for $1. It's trading around 75 to 80 cents credit. So I've got about a $1 credit that I'm trying to collect. I'm risking $400. So that's around about 20 to 25% of the spread versus your 15% of the spread. That make sense?
Yeah.
Okay. So I'm going to see if that gets filled. If it does, I'll try to grab $1, and my line in the sand is right here. So if we go down lower, then this may not get filled at $1 credit. If this thing kind of like rips back on the day, then there's some risk in the trade. So I'm going to place it. It's 18.625. Yep, 18.625. Put it right here.
I think you might see some higher prices today. Like we'll see it rise a little bit, at least by midday. So maybe you could take another for more credit.
Well, I could switch. If this is going to jump up in price, I mean, let me see what we're down for the day. So directionally and percentage wise, we've already made a move of about 3.3%. That's pretty big. What you and I have looked at on the higher time frames is there's not really a big level to necessarily be buying from. We've cleared the lows. Like that was what was scary about today's open is we cleared last week's lows by a pretty decent amount. So I think the bears are pushing as hard as they can. There might be some, I don't know. I mean, to the downside, like that 200 moving average is not sitting anywhere close to current price. So I'll do this. I'm going to see if I can get filled in this thing for like $1.50. I'll make it worth a little bit more worth my effort. Let me replace this to $1.50 credit. there. So if I get filled $1.50, I'll take the 350 risk and see if it gets filled. So if it doesn't get filled, no big deal. But I'll take that trade for the morning. And that's better to me than trying to call the bottom and say, well, I'll just, it can't go down any lower. Clearly that's not the plan. Like, this market is trying to go down and trying to go down quickly. And, everything is just getting beat up. Like, I mean, look, gold and silver turned red on the day, dollars down a ton. VIX is the only thing that's green pretty much in the entire, my entire watch list. So I think that is all pretty wild and crazy. But, 2.5%, almost 3% in the NASDAQ, 2% in the Dow, 4% in the Russell. Blood in the water, bro.
What a frustrating turn that was on Wednesday. I
Yeah.
told you I was kicking myself. I had expirations for Friday though, so I'm glad I stayed in. They basically were worthless on Wednesday, and then Thursday they got better, and today they're looking good.
Yeah.
But I think having the verticals saved me there. If I just flat out bought puts,
Yeah.
it would be a different story. But now, I guess because verticals kind of move even if you're drifting lower or higher, it kind of worked out this time. But I did not expect something like this.
Well, I mean, I think the hard part too is like when we have these really aggressive gaps, today feels like you open up and then it's like pure on panic where it's like, oh my God. I mean, we gapped like another, what's the day's gap? It's like from yesterday's close to today's open. You're talking about a gap of over 2% on the NASDAQ. That's wild, man. Even old uranium's not doing well today. So look, I'll show you. This is why the market sucks when it sells, right? This is why people get their panties in a bunch, and like this is what the heat map looks like. That doesn't look good, dude. Oh, good thing I'm in Apple today. That doesn't matter. Apple had a slight, like, where's Apple at today? Do I somehow cling on? Oh my God, dude, I might actually make money on my 220 spread today. Apple's up enough against the market. This is crazy. I might actually turn this. So Apple 220 by Friday close. Yes, maybe. Amazon, that's going to be a loss. Qs are loss. IWM loss. Google, Tesla win. Qualcomm, Mastercard, Meta. Like, that's a
Why
lot
don't
of
you just
profit.
close Apple now?
Oh, let me take a look at it, dude. Let me take a look at it. Because if it's I get in for, I think it's a $2 spread, and I got in for $1.20. Let me check.
Also, we have 1 minute. Just
All
letting you know.
right, we won't go long today, I promise. All right, Apple, the 220 by 2. Oh yeah, the 220 by 217.50. I got filled for $1.20. Let me see what it's trading for. I mean, to be safe, I should probably just take the profit. So let me see what it's trading for. Apple here, the 220 by 217.50. So right now I can protect about 70 cents. It's not the greatest, but it's certainly not worth taking on the extra risk when I can just guarantee the profit. So I'll go ahead and just take a 50-cent debit, take my 70 cents profit. I'll still make 140 bucks. Let me just go ahead and knock these out. Fill the 50 cents. All right, I'm going to do this really quickly.
Nice.
I'm going to put myself on a timer for 1 minute and try to get all these trades closed out for profit. 50 cents. Positions. Oh wait, this one's got to sign. This is the trade right here. Never mind. So close. And hopefully it fills for 49 cents or less, 45 cents maybe. Let me see. I'm just trying to grab a few more bucks. 45. Filled at 45. Yes, grab an extra 5 cents. Okay. 220, 217, close. I'm just going to take the mid price and see if they'll fill me. Booyah. So this is the nice thing about having a big liquid underline is I can get filled at the mid, the 220, 217.50. Take some profit, 47 cents. That's fine. Let's take it. Thank you. All right, so I'm just going to protect my profit on Apple. That's another one. I didn't expect to win on Apple today because I thought everything was down, but Apple is the lone savior. Now 40 cents debit. Yes. And probably by the end of the day, it's going to stay above 220 because you can see here are the expected move. It's like, unless we dump, this is probably fine just to keep all the way to expiration, but I don't need the unnecessary risk. I'll just take the money. So let's try it here.
You just have one contract, or could you just
No, I
take
have two
partial?
contracts. Yeah, I have two contracts. So I'm making like 100 and some bucks.
Okay.
So let's go 41 cents here. And lastly, Apple. All right, 41 cent debit. Nope, looks like it's jumping up a little bit. Come on, Apple, don't be a turd. All right, so let me just double check that all these were filled. So 120 close for 46, 120 close for 41, 120 close for 40, 122 close for 47, 120 close for 46, 120 close for 45, and 120 close for 50. So for here, I'm just going to say Apple closed for profit. So right now, for my week, despite all the garbage that you're seeing in the markets, I did actually make money. Apple, Google, Tesla, Qualcomm, Meta, and MasterCard. So I made money on all those. If Pfizer stays above 30.50, which might be a long shot today, but if it does, or next week, I'll still make some good profits there. I need to get above 30.50. It doesn't matter. So anyway, I'm obviously seeing a huge P&L drawdown today, which sucks. But this is also what I'm dealing with, which is a nasty sell-off. So, take it in stride. I've got to absorb some of the nastiness. I've got some hedges out there that, I'm looking to maybe protect. So a lot of stuff, but I know we've gone 3 minutes long. Let's wrap it up. But fun session, crazy day, and it's, possibly going to get crazier. So just buckle
We'll have
up
to pick
and
it
make
up
sure.
on Monday.
Yeah,
I'm
we will.
interested to see where it's going to be Monday.
Sure.
But yeah, thanks for hopping on today.
Of course, man. All right, dude. Have a good weekend.
Keep talking.
All right.
Okay.
See you, everybody.
Yeah.
Bye.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. Welcome everybody. I'm just clicking a couple last minute buttons here to go live on my Instagram. Interesting morning. Blood in the water, it seems, across the entire market. Everybody in the chat, it looks like everybody's tripping about gold. I get it. I've got a couple people hit me up like, dude, what the hell is going on? This is my outlook. Going into this morning, going into NFP, I was not entirely on board with a scenario that would look like weaker dollar. And I'll tell you why, but I'll come back to why. My ideal scenario this morning would have been a strong print out of NFP. I would have liked to have seen hot jobs numbers, maybe some weakening in the unemployment, just to challenge some of the assumptions that the market is having about rate cuts, only for the surprise factor of what that could mean for a momentary trade that I like to take conviction levels behind getting in on data that surprises the markets. The markets are expecting cuts in September, and we start to get data that confirms that. Not to say those trades won't be good opportunities, but they're just not as high conviction opportunities for me as opportunities that really surprise the markets. On top of that, another reason why I wasn't exactly enticed to get involved in any kind of a sell on the dollar this morning with any NFP numbers coming out that indicated weakness in the U.S. economy was because we've hit this 104 area for quite a while, pretty much most of the month, at least since the 11th of July. Tapped in once, rejected, broke down, but ultimately ended up pushing back through. And you just see, like, price was having a hard time breaking below this 104 level and hanging out below it. So I was just sort of like, don't really want to trade this lower from here. On top of that, there was a little bit of, I had this underlying thesis that if we got super crappy NFP numbers today, that could kick in recessionary fears, which would then potentially turn the dollar into a bit of a safe haven, which would mean even though we have crappy job numbers pointing to the downside, the edge of trading the doxy, trading the dollar to the downside would have disappeared slightly. We never got those recessionary safe haven flow activities out of the dollar today, but we certainly got it out of everything else. Everything is risk off, except for gold. Gold also fell to the downside, which I believe, I could be wrong on this, so don't take this as like, gospel, but I believe the move behind gold, what makes sense to me about gold to the downside is inflation expectations. If we're getting really terrible job numbers, like this morning's NFP print, I'm sure you all are aware, this was incredibly bad. Unemployment rate is up to 4.3%. In the June SEP from the Fed, we were seeing I think it was 4.0% was their year-end projection. So year-end projection for unemployment was 4.0. On the last unemployment, we beat it at 4.1, and this one we beat it even higher at 4.3. So unemployment is rising. Non-farm payrolls are falling significantly. We've been hanging out around the 200K area for the last few months. We're down closer to 100K now. Average earnings are also down, not incredibly down, but they're down. So all of this, it's a really terrible job print. So let's follow the train of logic here. If a lot of people aren't working, NFP numbers are down, job gains are down, unemployment's up, a lot of people out of work, average earnings are down, the people that are working are making less averagely. That would then should indicate a little bit of a slack in the demand of the economy. And if we have less demand in the economy because people are making less, they can't afford to spend money, so they are not spending money. Well, then inflation has a chance to come down. Those inflation expectations get to lower, and then gold, is a hedge against inflation expectations. If inflation expectations are lowering, why would gold need to continue to rise in value? That's sort of my thesis for the gold move. Now, this is hindsight capital 101. This is, if you want to sign up with a like a Wall Street firm that never loses, just join Hindsight Capital because you're always right. So that's my hindsight idea behind gold. I had zero prediction for that, zero foresight for gold potentially reacting like that. I tend to avoid trading gold because of some of the behaviors that it makes that are in that vein. For me, this morning, trading a currency made all the sense in the world. We had the Doxy falling. It wasn't recovering. So I got in on some Swiss buys real quick. The only thing I regret about this trade is not holding it longer. I was in like here and literally in this leg and out this leg. So it's my only regret on it was right here. This was my trade. Just grabbed a little something out of it, which it was a good trade for the way that I trade, but little pang of regret that I didn't at least leave a runner or two, but it is what it is. All this stuff, everything that's happening in the market today makes complete sense to me in terms of data reception via market participants. So I would have expected a little bit more equity upside, but then again, the recession fears grabbed a hold. I believe the recession fears grabbed a hold of the market around the open, and that's why we saw NASDAQ fall this morning after the New York Stock Exchange opened. And especially because this initial reaction at NFP, equities to the downside off of a lower NFP print, this is a really fast recessionary fear reaction in my mind that we didn't see in other assets. We didn't see the Doxy react in a safe haven manner from recessionary flows. I don't think we saw gold. Yeah, gold initially reacted the way that I would have assumed equities would have reacted. So a bit of an interesting reaction there on equity side from the initial NFP print, but the way that it's moved since makes complete sense to me. Risk assets, I believe, I haven't checked the currencies, but NZD struggling a little bit to continue to the upside. Odd. Here's a risk asset currency struggling to maintain any upwards momentum and falling back to where we were at the NFP drop. I wouldn't be surprised if the Australian dollar continued to drop off for the rest of the day, just getting in line with the rest of the risk assets. But yeah, that's sort of my outlook, my ideas for why why there's blood in the water today, right? All right, if you guys have any questions, feel free to send them through. When you know fundamentals, you would be selling USD at 106 area. Yeah. It's a fair point. I just don't know. I'm trying to remember right around here. I think all we had was PCE on this day, and I can't remember how it came out. But I think the first bit of data that we got that really gave us a good sign that the dollar was going to weaken, something happened this Wednesday, and I can't remember what Wednesday, July 3rd was for economic data. Let's go check real quick. Forex Factory. Wednesday, July 3rd. Unemployment and ISM. I mean, not much on July 3rd. I guess maybe yeah. I'm trying to see the closest area where we could have caught it. Now, price action said when you know fundamentals, you would be selling USD at 106 area. I'm assuming that you're talking about in hindsight, right? So in hindsight, we would have been selling over here the end of June, maybe. I know that in this area, basically because all year, but in this area, I was here on the A1 Trading Show and with my private guys, I've been saying I was looking for Doxy weakness to start coming into play. I don't think I ever got any real economic data reasons that gave me that until this CPI on the 11th of July. And then after that, it was pretty much like okay, my bearish bias is pretty well baked in at this point. Like I believe we're going down on the Doxy, but then we get challenged with this 104 level, unable to push past multiple times. Not really sure what data we're going to need to see in order to push past and hold past this. Obviously, today's job data is was the ticket for that. All right, let's see. Look at gold. Oh yeah, dude. Yeah, gold is melting today. That's for sure. Again, if you missed Michael, I don't want to mess your name up. Michael said, look at gold. It makes perfect sense to me. I don't know if you were on when I was just touching on this. I was just touching on why I believe gold went to the downside. I believe it's inflation expectations. So again, we had a really crappy really bad job numbers, right? So the job numbers are showing a lot of people that are out of work. There's not a lot of payrolls. NFP is low. Unemployment's high. That means a lot of people are not working. When people are not working, they're not doing what? They're not spending money. When people are not spending money, that removes a lot of demand out of the economy, and inflation is partially a factor of demand. And so the demand side of inflation has the opportunity to come down. So I believe the crappy jobs report that we got this morning lowered inflation expectations, and gold is a hedge against inflation expectations. So if the market thinks that inflation is going to continue to rise, well, then gold itself should go up in value theoretically. But if inflation is going to fall, if the expectation is people aren't working, nobody's going to be spending money, inflation's going to come down, well, that you don't need a hedge against lowering inflation. The value of gold also drops. So not to, this is certainly not to say that like gold is just never going to recover. It's never going to come back. It's just going to drop off the face of the earth from here. On a technical basis, we've hit resistance here at 24, we'll call it 24.30, 24.35, 24.80. And of course, I'm looking at gold future. Oh, no, I'm looking at XAU USD. Okay. We've now gotten a double top here. We could be in for a little bit of gold downside. Gold is a little tough to trade at times for me when it comes to the way that I look at the market. Because I'm also expecting further dollar downside outside of the dollar potentially reacting in a safe haven manner. So it's tough to say where gold's going to go from here. But if inflation expectations really grab a hold of the market and those inflation expectations continue to drop to the downside, I can see more downside move in gold for sure, especially with this heavy rejection from this 24.80 level. Somebody saying buy gold now. I mean, why? Like this is again, everybody, do as you please. Feel free to, take whatever trade you believe in. For me, trying to buy gold now is the equivalent of catching a falling knife, right? Like this is falling out of the sky, and we've gotten a couple little bullish candlesticks here on a 2-minute time frame. Zero reason for me to buy gold at all. I mean, you could get, if you have good reasons, please send them through. The originals saying buy gold now. If you can explain your thesis to me very well, not that I'm going to buy gold, but I would love to hear your thesis and your idea. Please do I have a video on what I just explained on XAU using unemployment and inflation? I don't have a video on it on YouTube, but you can feel free to hit me up on Instagram, and I tend to respond to DMs. Like I try to respond to DMs within like a day. Yeah, so everybody's worried about gold, and I get it. Gold is, obviously fell out of the sky this morning, but I think it's a completely reasonable reaction to the NFP print. Again, I don't want to repeat myself too much for those of you that are, able to follow it quickly, but I also want to make sure I explain this thoroughly. My thinking. This is my thinking behind the idea. It doesn't mean that this is exactly what's happening, but if you go to something like Twitter, like a pro deck on Twitter, and scroll through some of these things, you can read a bunch of people talking about recession fears this morning. Let's see. I just saw something on this post. I think it was here. Stay at home I believe this is stay-at-home mom rule issued a recession signal for the first time since the pandemic. So this morning's labor report triggered a recession signal. JP Morgan is now calculating a 50 basis point cut for 2. So there's all these, which you would think would translate to equity upside, right? Getting rate cuts, but equities aren't loving it because it's driven by potential recession, right? So recessionary fears are always this looming sort of like bear over the market that any there's like a buffer of jobs data. Let's take NFP data for instance. There's a buffer within this data where as it's going lower, once it breaks outside of this buffer area, then it triggers recession fears. And a typical reaction off of like a negative jobs report that would maybe indicate to the market that we're going to get a cut at the next meeting would theoretically be good for stocks, should theoretically be good for gold, should theoretically be negative for the dollar. But once it breaks outside of that threshold, outside of that buffer area, then it triggers recession fears. Well, this is too much weakness in the labor market. This is too much unemployment. This is unemployment rising to a level that's really uncomfortable. Are we going into recession? I think we're going into recession. We're going into recession. We're going into all of a sudden you got the sell everything voice yelling, and everybody's just jumping ship. Recessionary fears can take hold of a market, and I believe that that's what we're seeing this morning. And so, again, to tap back into gold, a lot of NFP was bad this morning. Unemployment rate was high. So what do we have? We have unemployment rate at 4.3. That is higher than the entire year projection based on the Fed's summary of economic projections that dropped in June. So really high unemployment. Lots of people out of work, right? Not a lot of new payrolls on the non-farm. So what do these two pieces of data translate to? Weak labor. I'm not going to type all that out. There's not a lot of people working. That means less people working, more people, less people working, less people spending money. Less people spending money means inflation has an opportunity to come down because that demand side of the economy has been weakened. If inflation is coming down, if inflation expectations are coming down, if people are expecting inflation to start coming down, they don't need to protect themselves against inflation rising by buying gold. So the gold move, I believe, is directly tied to inflation expectations that have been adjusted now due to this jobs report. For Lee James, I'm at official Nick Phillips. Let me see. All right, sounds good, Vincent. I'll try to get back to you, like I said, within the next 24 hours. The fear of a hard landing is good for the gold. The NFP data from this morning, downside liquidity. Wait, shit, where did that go? The NFP data from this morning indicates a hard landing. Fair enough. The fear of a hard landing is good for gold. Okay. Michael, I'm gonna write that down and check into that later because I want to make sure that I'm making sense of that. Price action. I had multiple people. So price action said, we know fundamentals and everything you were repeating. Why don't you actually do analysis and tell us how you apply fundamentals into your position? I had multiple people jump in after I said what I said like once or twice and asked follow-up questions. So I said that at the beginning of me repeating it. I'm sorry for those of you that know this, but I want to make sure I make it clear for those that still have questions. So yeah, as far as analysis and how I enter trades, sure, I'll tell you guys exactly how I took this Swiss trade this morning. So negative NFP, we had dollar drop to the downside. I simply waited for a little pullback. Ideally, I would have loved to have had a slightly lower positioning on this trade, but it is what it is. I got in at a decent spot. You guys might trip out when you see how low of the time frames I go to. I do trade off the 5-second a lot for red folder risk events. So we got this initial push. I wanted to see, after we started to get some pullback between this and the dollar, the time that I was watching this, I wanted to see the Doxy reach a certain point and the Swiss reach a certain point. And I will show you those points right now. Okay, so for the Doxy, let's see, what time was this? 8:40-ish, I believe. Yeah. So when we were in this area, I wanted to see the Doxy come back up and touch into this little price gap, which it almost did, and then was falling away. And at the same time, we had Swiss, the Swiss franc. On the 5-second chart, after data is released, what I like to do is I'll go in here and I'll find the first bit of like traffic, right? Areas, the first area where price was wicking, seeming to struggle, even if it was just for a few seconds. And that's sort of like a prime target for me. If price can get back to that area relatively quickly after the data drops, and then gives me a sign of rejection from that area, like a good sign of price action rejection, I'll get involved. And so that's what happened today. It didn't quite tap into my zone here. It got super close, which was the exact same thing that the Doxy did. The Doxy didn't quite tap into that gap that I had marked up, but it got pretty close and then fell away. So after we get this little double bottom here, this neckline break, a little bit of a pullback, and then a nice momentum candle to the upside, I just went ahead and jumped in. Risk would have been right around here, grabbed a 1-to-1 and got out. So that's the way I tend to trade risk events. You're in USD CHF since 0.90. Let's see. Basically, I'm trading the same thing with Swiss franc futures. It's just the opposite direction. So instead of selling U Swiss, I'm buying Swiss U essentially. Since 0.90. Dang, that's quite the trade here. Yeah, that's a good trade. Good job on that. Yes, consumer spending affects inflation. And Anton, I mean, clear this up for me in case I'm wrong. Wouldn't more people being out of work theoretically influence consumer spending? If less people are working, that means less people are making money. If less people are making money, that means less people are spending money. Right? That's kind of my the way I think about it. My opinions are all subjective. Okay. Let's see. Paul Reddington. This is where gold makes zero sense to me. It seems any argument can be made, but ultimately the market decides and ration arguments follow to justify the move. Ultimately unpredictable. Yeah. So yeah, I tend to not trade gold myself because there's so many different variables that it doesn't click for me. That's why I trade currencies. Because currencies, for me, they make sense. I was touching on this yesterday, I believe, on the show. You have to do what makes sense to you. You have to lean into what makes sense to you. Some people, gold makes all the sense in the world for them, and they can trade how I trade with red folder risk events and trade gold really well. It's not me. I can't do it because gold just does not click for me. currencies makes perfect sense to me. It's not 100%. There's no 100% obviously strategy to approach the market. Nothing is 100%. There's always going to be room for error here. But the way that currencies tend to react to economic data makes really crystal clear sense to me. So I tend to lean into that, Paul. If gold doesn't make any sense to you, there may be another asset out there that does make sense to you. Elham Weiss, my average risk to reward is 1-to-1. I have a pretty high win rate, but that means I don't get to sometimes it's a half RR, sometimes it's a 3/4 RR, sometimes it's a 1 RR. If I get like a 2 or 3 RR, I mean, that's a fantastic trade and I love it. I'll walk away with it, but I tend to get my 1-to-1s and just get out because my reasoning for getting in is based on new fundamental data that surprises the market, and the market needs to recalibrate its current pricing to match the sentiment created from that new data. So we got really bad jobs data. The dollar needs to recalibrate from where it's at to go lower to reflect the new sentiment of a significantly weaker labor market. So in that instance, I want to take something against the dollar. I like the Swiss strength this morning, so I went ahead and grabbed that. No, short on USD CHF, but it's the way that I trade it is Swiss futures, so it's long CHF USD essentially. Thoughts on the VIX? I mean, the volatility index, the way that I tend to look at the VIX, which could be wrong, but the way that I tend to look at the VIX is just the antithesis of equities at the time. So we have a super hot VIX. It's indicative of downside on equities. That's the only way I really think about the VIX. Again, I'm not a stock trader. Like I don't actively look for positions in S&P 500 or NAS 100 or US 30. Like I do trade them every once in a while, but it's not my main bread and butter. Like I said, my main bread and butter is currencies. And they just make sense to me. Everything about currencies makes sense to me. I can justify any kind of a move relatively quickly. Even if I've missed the move, I can go, oh, okay, well, this was X, Y, and Z was happening. That makes perfect sense. Whereas with like stocks or gold, I could go, well, this was happening and this was happening. I don't really know. And then there are times where with currencies, I'll be neutralized with my outlook as well because we'll have mixed data. Maybe, for instance, we have, let's say this morning, NFP had come out and we had super low NFP numbers, but we also had an incredible downside surprise in unemployment. Like, let's say unemployment came out at 3.7 instead of 4.3. This would be a mixed signal. So there'd be no way for me to even trade currencies. I wouldn't, zero edge there. What's your advice for a scared trader, scared of holding when in profit, scared of entering? Like, I don't trust my setup. I'm supposed to be in the gold buy, silver buy, but too scared to enter. I would say there's going to be a bunch to unpack there, but number one, reduce your risk. If you're scared, it makes me think you're risking too much on any given trade. You should be able to enter any trade that has a solid idea. You don't, in my opinion, you don't just want to be entering trades to enter trades just because, oh, price is going up and it's hit a little bit of a support. I have no other reasons other than this to get in. I don't agree with that approach. But if you have a solid thesis, you have a real good idea behind your trade, just reduce your risk to the point where if the trade lost, it wouldn't matter. Right? So, yeah, Lee. Yeah, I don't tend to not trade gold, and I tend to avoid equities entirely during earnings season just because earnings calendars make the moves a little bit less predictable than I think they would be at times outside of earnings. But yeah, if you're scared, reduce your risk. That's the number one thing. Being scared is a reflection of not wanting to lose, and not wanting to lose, in my opinion, means you're putting too much size into your trades. And that's why, like, let's say you have, I'm just going to throw out random numbers. Let's say you have $100,000 account and you don't want to place this gold trade because you know going into it that you're about to risk $10,000. Well, yeah, that's scary. That's super scary. 10% of your account on one trade, that's incredibly. So reduce your risk to where you're not going to feel it, right? And then get the reps in. So let's say $100,000 account, $100, you don't care. Like if you lose $100, oh, okay, that's water off the bat. I'm not scared to lose $100. Cool. Stay there, get comfortable, get in those trades, get those reps in, get those $100 losses, let them hit the account so that you can start to be okay with taking the losses. And as you take trades with incredibly reduced risk and your confidence in your ability to place trades increases, then you can worry about increasing your sizing. So there's a YouTube video called just look up Mike Bellafiore. I know it's a terrible name. I might try to type it in here in the chat. Mike Bellafiore, 7-figure trader, path to 7-figure trader. It was a video from Chat with Traders interview. He talks about the 3 areas of developing traders. So the first area would be consistently profitable trader. So if you're scared about trading, you've got to get your consistent profitability down, and you should not be putting any money at risk that you're scared to lose. You know, if you've got to go as low as risking $1 on a trade, you should do it just to get that practice in, to get yourself to a place where you're consistently profitable. And then the second layer is sizing. And then the third layer that Mike Bellafiore was going on into was the ability to express your edge with breath. Like me, I'm at this level. I can express my edge with breath. I know exactly why I want to get into the market when I want to get into. And I've already hit the level of I'm never risking so much per trade that I'm scared. If I am in a trade and I'm scared, I have too much size on. That's the only reason for me to be scared, is if I lose this trade, I'm going to lose a lot. That's the only fear that really exists. But if I go into it and I'm like, okay, if I lose this trade, I'm going to lose a couple $100. All right, cool. Like I'm good. I can handle that drawdown. All right. I believe I've gone over time a little bit by about 10 minutes. Hopefully I answered most of your questions. If I didn't, feel free to get at me on Instagram. Look at UJ and USD CHF. I'll touch in on this comment real quick. I don't see a pullback until it hits that next bottom support. Let's see where that next bottom support is. Why is this? What is this green line on my? No idea what that green line is. It's involuntary. Okay, there we go. So for CHF, I'm assuming if you're looking at the daily, the next area of support is sort of at 85.5. I mean, that makes perfect sense for me as far as like a target for selling the dollar. Again, I have no reason to buy the dollar at this point in the game, except for potential safe haven flows developing out of the recessionary fears, which we're not seeing the dollar react like that at all. So the dollar's not acting as a safe haven flow right now. Is everything else down? All the other currencies are, Euro and GBP aside, all other currencies are behaving in a risk-off manner. So you've got upside in yen and Swiss safe havens, downside in AUD, NZD, and CAD risk assets. All of the equities starting to climb back a little bit here. Most of them down on the morning. So you have zero reason to buy the dollar, but not a bad area if you're looking to buy the dollar. pretty strong support here, 85.5. Lower. Look at weekly. Okay. Yeah, I got you. I can see that. Yeah. Yeah, I can see that area being somewhere to look for buys for sure, but I would need some real world reasons for me to want to start to buy it. But all right, guys, I'm gonna go. Someone's calling you again. Could you guys hear my phone ringing? That's crazy. All right, guys, I'm gonna go ahead and call it. If you have any questions, feel free to hit me up on Instagram. From all of us here at A1 Trading, thanks for tuning in, and we will see you guys next time.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.